Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio, the one and only Tracy Shuchart, otherwise known as our senior economist here.
Good morning, all.
And of course, who is not in studio, but we have this big video of him in studio, so he feels like he's with us every day.
Right?
Senior market strategist, Jim Cagnina. Good morning, Jimmy.
Good morning, Deli. Good morning, Shy. Welcome, everybody, and get ready because today hurricane season starts.
Oh.
Oh, God. Did he normally starts off with such a positive message. Is he throwing this at us already? Good morning, chat. Seeing everybody in here. We've got Steve, Weston. We've got some people that are in here really early, and I love it. Getting some chat going. My Serona, Video Starcade, Lee, Tim, Paulie. Good morning, everyone. 132,000 subscribers now to NinjaTrader Live. That puts us at 20K since the announcement. That's awesome. So obviously, if you're tuning in here to NinjaTrader Live, please hit that like and subscribe button so you never miss us every morning, and we really appreciate that. As far as markets go overnight, I come in every morning as I do, write my morning notes, free. I post it in the chat every day. Hard to find something to talk about today. I look at the market across the board, kind of a little bit of a rotation off of what was yesterday. You had dollar weakness yesterday, slight bit of dollar strength today. You had really a strong day in the metals. I'll get into that a lot today, as that's been a continual pattern for the first day of the month in the quarter. So now you got gold, copper, silver, platinum rolling off. And Mike Burke actually talked about this yesterday with Shy and Hot Commodities, that copper is that market that typically, if you have a big move one day, it rotates a little bit the next. Bond market up slightly this morning, up almost 1% in the 30-year, short end of the curve, middle end of the curve. It's not an end, but it's the middle. Is relatively flat. Bitcoin up modestly with ETH. Commodities, you've got Angie got me looking at commodities now. Wheat up just a touch this morning. And equity index is flat. You know what? Rollover is coming. We've rolled through gold and bonds. We're now in the midst of the equity rollover, and it just feels like we're in this holding pattern. We're not getting a ton of news either. Shy, anything overnight to keep note of?
Yeah, I mean, there's not a ton went on. We had the OECD come out and say Trump tariffs are hurting the U.S. and global economy, and they slashed global forecasts for the second time this year. We did see a little bit of pressure globally on the index markets, but we have recovered since then. Really more news in the commodity sector. We had oil and product stockpiles in key regions have waned, meaning they've come down significantly. And we have global passenger jet fuel demand up 1.1% for the week ending June 9th, up across all regions. This is so far. Which is interesting because the OECD just said, just slashed growth rates, yet we're seeing consumption in the oil markets. That does not exactly say that the economy is slowing down. Jet fuel demand up. It's not even summer yet, so I found that very interesting. Since we did talk to Angie about grains yesterday, we had some positive news for U.S. grains. U.S. held talks with Italy on getting more grains into the EU. And then if you remember, she talked yesterday about how, aside from China, the U.S. was courting Asian markets. So it looks like those talks are bearing fruit, with Vietnam pledging to buy more American crops to strengthen ties with Washington. Moving over to silver, SLV, which is the silver ETF, broke decades high. The upside skew is exploding, and call spreads are getting loaded.
Well, you take the metals out of the equation, everything you said to me spells like inflation. And that's what it does, right? I mean, commodities, we talked about this yesterday with Angie. The surprise is that they start to rally, right? So you got the softs potentially rallying here. And you've got crude oil again, yesterday, crude oil failed to take out that recent high. I talked about a 64.19. It broke. You and Mike went over this in Hot Commodities. But again, it's up again today. So there are dip buyers out there in that market. They're not getting too far with it just yet. And I say just yet, but I don't really know that they will. But I think that's something to really keep an eye on, right? As we get a Fed meeting later this month, I don't think this month will be that big of a deal, right, Shai?
Yeah, no, it's not going to be that big of a deal at all. They're expected to hold pretty much the market is saying hold. So,
yeah. And then ultimately, we're also in this holding pattern. We've got unemployment Friday. What's expectations for that? And what data maybe we have for today?
So, for today we have a durable. This is all at 10 a.m. by the way, and I'll put this all in the chat as it comes in. But we have durable goods, factory orders, job openings, quits, and layoffs, and then total vehicle sales. So we do have that data coming up. Again, I'll put that in the chat and on the ticker as usual when that data comes in. Probably not hugely market moving. Economists will definitely be looking at that layoffs level to see if we're starting to see any kind of weakening in the economy. That kind of sets us up for Friday data, which is non-farm. Again, I don't expect that big of a change yet, again, because if you remember, all these government workers that were laid off are still getting compensated for 8 months. So we still haven't really seen those layoffs filter into the jobs data, but obviously that's going to be an important number to see if we're seeing any kind of weakening in the labor market, which that would cause the Fed any kind of concern that they would be willing to cut rates sooner than expected.
Yeah, everything's on a pause.
Everything's on a pause.
Everything's on a pause. Jimmy, we'll go to you. Not a lot going on overnight. What are you seeing?
Yeah, no, that's right. It's interesting to see the treasuries and the equities kind of still consolidating where we had some breakouts in some of the other markets, but the 30-year bond right now I'm taking a look at. We have an inside bar today. Yeah, it's slightly green. Yesterday we had a pretty red day as well. And so when I'm looking at the dailies, we're kind of out of that downward trend that we started all the way back in the end of April. And now we're kind of sideways here. We keep bumping up against this rectangle right here. This is approximately almost that 113 handle. We just keep popping against it. So that's area resistance right now that's pretty strong. And, it's going to be tough to get through that, especially with the bearish sentiment that's running around in the Treasury market. But we are above the ADMA. The ADMA has been tracking nicely, relatively horizontally. So I'm looking at this market kind of for a clue, and we're not getting it. We're just getting kind of a sideways price behavior right now, especially with this inside bar, and the stochastics just kind of drifting sideways right now.
So, Shai, what is the story right now? I mean, you're diving into the news every day. We're in this holding pattern as we wait for tariffs. You talked to commodities this morning. I continue to see the opportunities where I see volatility and volume remains in metals. To me, that's just where I see the only real sector where you have fundamentals and technicals working together, right? I've been trying to buy platinum on dips again because I've been following your lead on that. It's really the only market, honestly, which is weird for me to say this, that I'm really actively looking at swing positions on, because equities is, again, it's just too hard to manage risk up here. But kind of give us the landscape.
Yeah, I mean, I think the metals trade, and we've kind of been talking about this all year. The metals trade is kind of where it is at. When we talk about, we've talked about the gold-silver ratio back above 100 again. That means silver is relatively cheap to gold. People like to look at that market for that. Also, when we see these gold spikes, if we look back throughout history, if we look at the long-term chart since the 70s, right? Every time we've seen kind of a gold spike, silver has lagged, but that spike has been more potent than the gold spike. And so we'll see what happens with silver here, since, gold has, it's been quite a while since we saw that breakout over that 2000 area. And silver's kind of just been consolidating sideways for much of that. But it looks like it may be poised to break out above that, that $35 area where everybody has been trying to short that for the last 9 months, in which case we could possibly get a short squeeze as well. But not surprising after the huge moves we saw yesterday in gold and silver that we would be, and copper, that we would be taking kind of a pause here. But we'll see what the U.S. session does.
Yeah, immediately I pulled up the COT data, and you can see the commercials are really, I wouldn't say they're short to the extreme levels, but they've been short pretty consistently this entire move up. Going back, and I'll go over this morning with Pharm when I get my charts up there, you could see from the rally in March of literally last year, and I'm going back that far with silver, that there has been commercial shorting the rallies. Now, when I look at the large specs, they're long modestly, right? And so again, that's where the short squeeze comes into play, right, Shai? Is that the commercials, and they're not the most short they've been, but they're not far from that. And you look at it, though, every time we've gotten up to this mid-35s, even low 36, going back a long way for us is a year. I mean, obviously, in this group. But, we got a lot of short people go back. I don't even go back to the last night's session, Deli. But, yeah, I mean, when you look at it from this far back, I mean, this area becomes really big. I mean, what are the implications of silver rallying like this? What are the implications on the overall economy? Because I know it's used in a lot of places. I mean, I'm just curious what happens if silver spikes?
Well, because it is also an industrial metal, not just a kind of a store value, obviously that does make prices more expensive. Silver's used in a lot of renewables such as solar panels and wind turbines. It's also used in a lot of medical applications, dental applications. So, it is widely used as industrial metal. Obviously, higher prices mean higher prices across the board for those kinds of products.
Yeah, you wonder how inflation does come into play middle to the late part of this year as we talk about commodities potentially catching a bit, at least some of them, some demand coming in there, oil potentially for a breakout, and what happens with silver. Those are stories I think equities may not be following too closely, and we know with the large caps, they don't kind of care. They kind of bypass all this anyway, and I get that. But it is something to watch for what the Fed does, and I think overall for like the S&P and Dow, I think they're really connected to what happens here. Maybe not so much the NASDAQ like we said. Jimmy, equity index is coming in overnight, relatively flat. First day of the month is behind us. It's a unique time, Jimmy, because it's the first day of a new month, but we're really going to be trading a different month at the end of the month because we're going to be moving to September, which is mind-boggling to say that we're even moving to SEP already. And you've got unemployment this week. It's kind of like, kind of this rush into what happens into the end of this June contract. But just give us kind of an overall of what you're seeing right now in equity indexes.
Yeah, I mean, in equity indexes, I mean, it's almost like in a consolidation, and I'm going to talk about the micro NASDAQ and the Edge report in a couple seconds, but, we're kind of going sideways right here. It almost seems like there's a move afoot to try to make new highs in this market. This one in particular, the micro NASDAQ, but it's just having difficulty. I mean, we've been several days in this consolidation range, and it's almost like a draw between the bulls and the bears right now, trying to figure out direction with the news cycle we're in. But we are getting some smaller candles, and we are getting some, with the exception of yesterday, some smaller body candles as well. So to me, there's a little bit of uncertainty in terms of where the next paradigm shift's going to be in this, whether it's going to be the upside or downside. But there's some nice levels to trade off of, so I'm not giving up on it.
Got it. Now, we have a very special guest today, Carol Roth. I was fortunate to be on a Spaces with her, with you, I think just right at the end of last year. Love Carol. Big fan of her Twitter channel. Big fan of her hair. She's got great flow. I told her this it's very rare that I say someone's coming on who's got better hair than me, but you know what, Carol, I kind of got to say, hat tip to you. But let's preview Carol.
So she is a recovering investment banker and New York Times best-selling author, 2 books. And she'll be very interesting to talk to because she's a very strong advocate of small business. We can find out kind of what's really going on in the economy and small business wise, and maybe why do we, if we are seeing a problem in the economy and small businesses, why do we have indices up, for example? So we're going to kind of dig into the whole fiscal situation going on right now.
I've got some good questions for Carol, but before we get to Carol, we've got to go to our man, Jimmy Cagnina, for this morning's Edge Report. Take it away, Jimmy.
All right, well, let's continue our conversation with the micro NASDAQ right now. And just to get a little bit more detail, we are tracking this 8 EMA pretty nicely on a daily chart. We wicked to it again today. We traded through it yesterday, the day before. It's a really nice touch point, area of interest on the chart, on a daily chart. This, again, this rectangle on the top here is just resistance, and it's been sticky ever since, we broke into this kind of consolidation range, and that was back on May 13th. To define the conversation on the bottom here, we got a lot of support around 29.75, give or take. Moving averages are just shooting right up, sloping up nicely. And the stochastics are kind of settling down sideways. So, this is consolidation until it's not. We'll see if we break through this area of resistance, but it's been pretty tough. We do have some targets here. And by the way, we have 156 point or handle range so far in the day. That ATR is 426. So we have a lot of potential either on the upside or the downside. We don't know which way. But after the London initial balance, we've had a nice orderly rally all the way up to that Menthor Q 0 DTE put support level, and then the main put support level as well at 21,520. And that's what we're trading right this second. We do have some targets. We had previous sessions highs here, which we achieved toward the end of the day yesterday. That's at 21,576, and then JAX 4 right above that at 21,600. Further up, we have JAX 3 and R1. There's two areas of interest up here, which caught my eye at 21,700. Again, we got to break through that area of resistance that we just saw on the daily. Blind spots down here at 21,360. As a target for the bears. We have S1 in that one-day min level, almost matching exactly 21,284 on the downside for the micro NASDAQ. So there's some room to grow here if we get a breakout one way or the other. Interestingly enough, though, the London session could not keep us down, could not keep a good index down. Let's shoot over to silver really quickly here if we can, because silver is an interesting breakout. So we broke out of that let me move this over a little bit. We broke out of this long-term consolidation range in silver. You guys were talking about it. We broke out big time yesterday. I calculated the midpoint of that big green candle here on the daily that we saw yesterday, and it's right, approximately, let me just tell you exactly where it's at, 33.91. We have a little bit of a sell-off coming off of that rally today, but we're way above that midpoint still, and we have a buyer's wick at the bottom of this candle. So I'm a little bit bullish still today on the silver market. Commodities is where it is at today. If you could take a look at the copper chart too, but just daily, let's get some targets here for the silver traders. We have call resistance up here at 35 bucks even. Previous session high is pretty close to that at 34.95, and we have that 0 DT put support that's kind of framing the top of the resistance on an intraday 10-minute chart right now, 35.49, rounded up to spot 50. On the downside here, one-day min, Menthor Q again, strikes 34.07, and then some other targets a little bit lower, 33.90, and then S1 is pretty far down here at 33.685. So there's stuff happening in the silver market. There's stuff happening in the copper market. Spit it out, Jim. And let's go to the 30-year bonds. We got to check this guy out. Let's pop this up. We're still kind of, interestingly enough, we popped out. We already talked about this a little bit, but I want to go into a little bit more detail because we're trading above that 8 EMA today, and that 8 EMA has been a factor every single day lately. We're getting up to really close to that 21 EMA too. That's that red line, and that's right where that resistance is up on the 113 handle, give or take a little bit. Yields, cash yields are a little bit below that magical 5.0 level this morning, last time I checked. And we have some nice stochastic action going sideways here. So this this is suggesting consolidation. I didn't see anything on the bond auction schedule today to worry about for this market. And surprisingly, this low might stick. I don't know. It was a 110 handle and it matched that January low as well. Intraday, we got some targets as well. That one-day min is framing the top of the conversation, 112 and 27 30 seconds. Above that, I would look for that Jax 2 R1 level, between pretty close to 113 even. With that would be a 113 handle. That would be meaningful if we can get up there and close above there. On the downside, though, this pivot, I have my eyes on this pivot at 112.13. And then if things really, really get ugly, previous session's low is right down here at 111.27. That is this morning's Edge Report. Back to you, Shai and Deli.
Thank you, Jimmy. And of course, we are now joined by recovering investment banker and New York Times bestselling author and best hair that we've had on the network by far, Carol Roth. Good morning, Carol. How are you?
Good morning. I always say that I'm for small business, small government, and big hair. So glad I could represent that so early in the morning with you guys.
Oh boy, today is a special day, Shai. This is really going to be good. So, Carol, really excited to have you here today. I want to dive into the economy, and I know we always focus on markets, but I think that at this point in the year, we're already halfway through the year, which is kind of crazy. We've had a tale of two different markets, really. We had the market that was in a big rush to sell because everyone was worried about the uncertainty of what was going to happen with tariffs, and then we had the big rush to buy because of the 90-day pause and probably a few other things, other reasons as well. But with all of that happening, that's all market talk and obviously the potential for what could happen with tariffs and other things in the mix, of course. But where are we in the U.S. economy right now?
I think we're in a quite a bit of uncertainty, probably not so much unlike the broader markets. Obviously everybody's hanging on President Trump's every word to figure out where we're going next. There's obviously a lot of optimism when Trump was elected with the hopes for massive deregulation, for some tax certainty, lowering barriers to growth and the like. And I think that everyone was thrown a little bit for a loop in terms of the order of operations, that we got, tariffs and Liberation Day before we got some of the others. I do think that we are, at least, especially with Scott Bessent out being one of the lead communicators, starting to right that ship at least somewhat, starting to seem like we're going to get something out of Congress that maybe gives a little bit more tax certainty. You've got Bessent talking about, maybe as early as this month, seeing deregulation, possibly starting with the banks. And at least on the tariff front for those businesses, particularly who are dealing with China, 145% tariffs. That wasn't a tariff, that was an embargo. That was, we're not going to do business. At 30%, while that does have a massive impact, at least you can have a strategy. So I think that, there is some cautious optimism in certain places, certainly in small business. When you look at the small business optimism index, it is down over the last few months. But that's something that I can see moving and shifting as things progress, hopefully with the trade deals, assuming that they don't move backwards, that, that we're moving forwards. And then, kind of the other piece of what's going on that we're just starting to see impacts from is AI, and, what that may mean for the job market, particularly interestingly, the white collar job market versus, the traditional middle and working class. So I think there are a lot of interesting dynamics at play right now.
Before I get to Shai, I want to just quickly ask you about AI, and I hope that you talk about this, Shai, because you've been very active on Twitter talking about this. How much of that do you think in the future has an impact on the job market?
Well, that is the multi-trillion-dollar, question, maybe even bigger than that, because we really don't know. There's a decision tree of possibilities and probabilities that go from the probability that it's a tool that helps productivity in certain areas and displaces people in other areas. And there's just sort of a general resorting of jobs, as we see anytime there is creative destruction or, some kind of a new technology coming along. Of course, there is the possibility, the outside percentage, that it, changes things, at least from, even if it's not, wholesale over time, maybe in a short period of time. And so that ends up becoming a catalyst for a call for, all kinds of tyrannical proposals and UBI and a lot of things that, get into our freedoms and change sort of how the economy is part and parceled. So I think we're still early stages, and this is probably the debate that's going to be going on daily until we, kind of see this play out. But I think you have to look at the different paths and kind of prepare yourself for, what's most likely, but also, like everything else, what happens if you have this outside scenario that many are predicting of just complete and total upheaval and chaos.
And if we look at markets, I mean, obviously we're still, tariff-wise, we're still on a 90-day pause. So we're still nowhere. We have no actual solid deal from any country, just sort of a broad framework with, say, the UK. And yet the markets seem to be completely shrugging this off. Why do you think that we're seeing this? And maybe, we are being led by big tech. Is that all kind of AI optimism that may be leading the markets?
Yeah, I mean, I think that the sentiment, whether it is correct or not, is that the worst is behind us. That Liberation Day was that climax, and whatever comes next couldn't be any worse. That, we're moving the car forward, and we're not going to move it into reverse. I think that, again, if we go into probabilities, is the probable outcome, but we do know that we have an administration that likes to throw some curveballs. So there is certainly a possibility that things shift. That being said, obviously the markets have had a vote, maybe not as much the stock market, but certainly the bond market. And given our fiscal foundation and the fact that that is very tenuous and fragile, kind of without them adding this into the mix, I do think that that's going to be a check for what is able to be done in terms of policy. And I think that when we got, I don't know if you want to call it the Besant put, when the bond market said, hey, we're about to revolt here, and then we got a shift in strategy, I think that gives enough comfort to say that, yes, there is a boundary here that they're not going to cross.
And speaking of, we do have this big, beautiful bill in the office. How, obviously we know nobody's going to cut spending. You just can't. No party's going to cut spending. And so what, do tariffs actually make up for this excess spending? What is this kind of looking like on the fiscal side? And where does that put the Fed?
These are all excellent questions. My view on tariffs, as somebody who works particularly with smaller businesses, some who have part of their supply chains overseas, is that the tariffs aren't being paid. And I know they keep saying that they're being paid by China, and maybe some portion is, but mostly it's being paid by businesses and ultimately consumers. So that being the case, even if the US is collecting those dollars at the federal level, it's moving it from one pocket to another. If it's a business that's paying that, that is less money for them to make investments and hire and things like that. If it's the consumers, it's less money for them to spend elsewhere. And so I don't think that that's something that's going to plug a hole in any meaningful way or a long-term sustainable strategy, because one of the things that we know is that the country cannot afford for the GDP to recede. We need for it to grow. And we've seen everybody from Besant to Musk say that. And the reason is because we need to keep those receipts up. And to the extent that we get a contraction or we get money moving from one place to another, that is not helping the growth cause, which is really the driver of the receipts. As we know, last fiscal year, we took in about $5 trillion, which, by the way, is more than the GDP of every single country on earth, except for the US and China. So theoretically should be plenty of money for the US government, but they're still running, a 6 to 7% of GDP deficit, an extra $2 trillion, which is a wartime level deficit that, shouldn't be in existence when you don't have a recession or a war. So in terms of what the Fed does, I'm going to take a little bit of a different slant here and say, I don't know that it matters. We had the Fed cut rates last year, and then what happened on the backside of that, we're somewhere 80 to 100 basis points above that on the 10-year yields, kind of depending on the most recent day. And so we are in a period of what is considered to be fiscal dominance, where the fiscal policy is really going to drive what's happening, and the monetary policy, those tools, really don't have a lot of impact. And I think that that's something that's maybe a little bit underappreciated right now. So the Fed can do what it is that it wants to do, but they really have lost control of that long end of the yield curve. And I think that really it is incumbent upon the government to have a strategy. And like you said, it's not happening in the big, beautiful bill, but it would be great in some of these rescission bills, or for them to kind of come out with, a plan for them to reduce spending and create a situation that isn't going to push us into something like a debt spiral or, some similar situation over time. And I think that's, when everybody's focused on the Fed, that they're maybe missing the main part of the main ring of the circus. They're looking at the sideshow.
Carol, I want to end talking about the Russell 2000 because you focus on small business. And
Yeah.
I'm in the camp that you're never going to have a really solid bull market from here
Yeah.
unless you have all the indexes working together. I mean, the NASDAQ is always going to kind of do its thing, and it might have a bull market on its own in some ways, right? And the S&P might get dragged up by it. But to have, I think, a real bull market, it's good to see all the indexes working together. The Russell continues to struggle. And that is the market that is reflective of the small business. So talk to us about what you're seeing in the Russell, and why do you think that it continues to lag the major markets?
Yeah, I think that first of all, it has become very difficult with regulation, with Sarbanes-Oxley, all the different rules that they have for companies to come public. So you have, some of those who might be great investments or leading in the kind of small and medium area, who really don't want to or can't deal with being a public company. And so the choices of who you have, tend to be a little bit more limited. And then, you do have all of these barriers and this tipped playing field that we've seen over the past 15 plus years, first with ZERP and then with, some of the regulation that really has benefited the big players, but, the smaller players don't have the same kind of scope and scale to take as much advantage of that. So I think, maybe when you get some of the tax certainty and deregulation, that then you would have a scenario to help unleash a little bit more of the growth from the smaller players. But at the same time, you do have a situation where you have a consumer, which is becoming ever more tapped out, and a bifurcation between the haves and have-nots in the consumer. And I think that is weighing heavily on those smaller companies. And to the extent that something isn't done to provide some relief at the consumer level, I do think that also can have an issue, for some of these smaller companies. So even though I'm a huge small company advocate, I do see a rocky road ahead. And it's one of the things I would really like to see out of this administration, because we've heard from everybody from Trump to Bessent that they are going to be Main Street first, that they're very focused on the smaller entities, but we don't have a lot of people at the table who have deep knowledge of this segment of the market. You've seen a lot of the technologists hanging around, and you've seen government policy guys, but the people who really understand kind of the inner workings of the smaller business and how this regulation impacts these companies and really, frankly, creates barriers, because that's what most of when I talk to these companies, that's the biggest issue, is they're not looking for help. They're just looking for the government to get out of the way. And I think that if the Trump administration brought more of those voices to the table and could get rid of some of those barriers, that certainly, I think, would help and would change the fortunes of the Russell. But I do think you're right. There's been, just like in the economy, where there's been a bifurcation and of the haves and have-nots, the same thing with the market. And the Russell, unfortunately, has been the have-nots. And I think that until we see a major sea change, I would imagine that you'll see more of the same.
Yeah, and I just think it creates a bumpy bull market, and with a lot of ebbs and flows within it. And just tying back to our entire conversation today, what worries me about the small caps and really the consumer is you look at what's happening right now. You've been really in somewhat of a bearish market for commodities. You've been in oil that's been in a holding pattern for a good period of time. And now both of those markets are looking like they could start getting ready to rally. What does that do to inflation? What does that do for confidence? Which we've not seen spending come down that much. We've talked about this a lot, Carol. And I know we're running out of time, but I'll give you the last comment on this. It's like, to me, the inflation story does come back into effect, I think, soon, based upon what I'm seeing in markets. And how does that overall impact, I just think, again, the overall economy?
I think it's almost not a choice that inflation is going to come back, because where we stand with our fiscal foundation, if you look at debt to GDP, deficits to GDP, or interest expense, where the 10-year is now and how much debt needs to be financed and refinanced, there are lots of tricks and creative things that the Trump administration can do to buy us time. But every single one of those is going to be highly inflationary. And if you get, any situation with a move in yields, you get any situation where receipts are down, recession, that's going to just put more pressure there. So unfortunately, the release valve for pretty much everything, unless they're just going to let the markets fall apart, which I don't think that they're going to do, is going to be inflation. And so I think that as we see this trajectory of it moving downward and looking like it's getting back close to the Fed target, I think that's a breathing point. And like you said, we should be prepared for it to kick in probably late this year. And I don't think the consumer is expecting that. And I do think that is going to be a big drag unless, we get, some sort of miracle that happens on the growth side to counterbalance it. So that should be very interesting, because you will probably have a situation where there's more accommodation for the markets, but not necessarily reflective of what's going on with the underlying consumer. So nominally, probably market does well, but on a real basis, that's the question mark.
Carol, this was absolutely fantastic. I can't thank you enough for joining us here on NinjaTrader Live. Shai and I are huge fans of yours. Love everything you put out on X. Everyone, go and follow Carol on Twitter. It's Carol J.S. Roth. We'll put the link in the chat and go and check out everything she's doing. Carol, you're the best. Thank you so much.
Thank you.
Great to be with you guys. Thanks, guys.
What I worry about is silver breaking out. You've got commodities potentially starting to catch a bid here. Right? Not necessarily today, but even with the dollar higher today, commodities are up. I think this is a story that plays out. It was really great having Carol here at this time, because it's really important for everyone to recognize that, yes, we've had this big rally, again, led by, large caps. The big guys are always going to lead, regardless of what we want to say about stocks. They're in order for you to outperform the S&P 500, you got to buy the outperformers, and they're always going to be most of the time. It's a unique time because if the Russell doesn't catch a bid, what does that say about, the consumer?
Right. Well, it's saying it's a weak consumer, and we're already starting to see a little bit in the data where we've seen savings rates up, and consumer spending down. So we certainly will keep an eye on all of those data points as they come in.
Yeah, and so again, not green light for new all-time highs. I think because of things like this. This is kind of what's keeping us in this holding pattern as we talked about. I agree exactly what she said. Once we get some clarity on tariffs, you get some clarity on deregulation and how that looks, and you get a Russell that sparks, look out, I think.
Yeah, absolutely. I absolutely agree.
Yeah. All right, Shai, thank you so much for today.
Thanks.
All right, everybody, it's about that time. Let's bring in the big guy, the big calf guy. There he is. Good morning, Pharm. How are you?
Good morning, Deli. I'm doing all right. How about yourself?
I'm doing great. It was great to have Carol in here today. We haven't talked about the Russell much, and I brought it up. And there was a time, maybe a few weeks ago or maybe a month ago, where you and I were looking at it and saying that some of these levels were pretty critical on what the market was going to do, and that's just completely dropped from the conversation. But I do believe that in order to have a sustainable, really healthy, big bull market, I think you got to have the Russell involved at least somewhat. It doesn't appear as though it wants to be involved much at all. Thoughts on what Carol said, and just maybe some thoughts about small caps?
Yeah, I mean, where I'm at with my cranky old man hat and, the fiscal dominance that we're seeing, and it's just so gross to me. And I do think that inflation 2.0 is the story. And this is the problem for the Russell to me. Really like the last year. I mean, we've basically vacillated between recession is imminent and inflation fears. I mean, really for quite a while. I mean, there was a period of Goldilocks, and that's when the Russell did really well, right? Where everybody was like, oh, soft landing, no inflation, everything is great. But now I think it's a little bit more clear that it's kind of going to be one or the other. And the Russell's not going to perform well in either a recession or a significantly inflationary environment. So it's like, how do you, maintain any level of comfort bidding the Russell? And so that's kind of where I'm at. And I feel like it needs a sweet spot, right? It needs, yields not too high and yields not too low if they're too low for a reason that's not great. So it's been tough, and it's been choppy, and it's been ugly. But I agree that if it can get some life, it would probably have some reason to get some life, and that would feel a little bit more healthy for the market.
Yeah, I think it changes the dynamic within the tape. When you have all indexes working together, that's typically when you're going to get the cleanest, strongest moves. We all work together lower. We've somewhat worked together on the way back up, and I think that's also why you're in a holding pattern right now. Let's go to the charts. I'm going to start off with the Russell, and I'm going to pull up Crowded Market Report, Jason Shapiro's indicator for the COT histogram of what's happening with COT data. And look at this lack of, this is the commitment of traders. Look at this lack of commitment in the Russell. And it's really as flat as of a commitment of traders as you could see almost on anything. And so this market it was a little bit shorted a few weeks ago on this high, and they were pretty much spot on. And since then, these shorts, it was bought by the commercials, shorted by the large specs. And since then, they've both kind of covered, and you're back to this flat. And this is all, really, most of that took place on this weekly bar up here where we had this, where we had the recent high. And since then, it's just been a meeting in the middle of, hey, I bought from you, I sold from you, let's buy them back, and we're kind of like at a wash. It's very interesting when you see things like that happen versus what's happening on, let's pull up the NASDAQ, where you've got large specs continuing to come in and buy this market, although they've since dipped on this recent rally, which I think is interesting. Look at this. This is one of the things I like about COT data. Again, it tells you what's happening as a move's going higher or lower. You had big, large spec longs come in on their almost the retest of the low, and since then they have been selling off those positions, right? And you had commercials that were short, pretty heavily short up in here, and they've come all the way And what I see here is that nobody is really convinced on any positioning now. Hence, why I think we're in this holding pattern. I mean, it doesn't take much for you to go in and dig a little bit, scratch beyond the surface to see that, look, nobody is convinced of what's going to happen from here. It goes to show you that, it's not a green light for new all-time highs, and it's not out of the realm of possibility that we go back to the lows, although I think this year it's unlikely without barring a headline, because you kind of had everything with that momentum going towards it, but doesn't mean you can't have a pullback. And you just see the positioning is just, everyone's just slowly getting out. I mean, look at what's happening to an S&P. I mean, it's wild to me that you see all this positioning coming off, and it's almost like there's no commitment of traders. I know we're going to get into technicals in a second, but I can't look away from the COT data and see how no one is really building positions here on either side.
Yeah, I mean, you can see it, you can feel it in the tape. You can see it, you can feel it. I'm glad that you brought that up, because I mean, it just feels like participation right now is just extremely, extremely thin. I don't see, and that makes it hard to trade, right? I mean, I like to see big money moving size with intent, and we're just not seeing that right now, which is leading to some of this, I mean, call it chop or whatever you want to call it, but some of the action that just doesn't always make sense, which we'll get into a little bit more after you do your charts and look at mine.
Yep. No, but I mean, look at it. I mean, let's go to, let's actually, let's just go back in the same place that we started, right? We'll start with Russell. And, I like the VWAPs because I like to anchor them from specific areas. This is the high where the COT data started to shift, and all the positions have rolled out. And look at where we are on that VWAP. I mean, how interesting is that we are right on it? I mean, pretty much right exactly on it when you look at that. From this high, which you go back to the COT data, this was where that huge spike in volume came in terms of positioning. Longs and shorts came in on that high. So you go back and anchor it to that moment, because I like anchoring at key areas, and look at what's happened. I mean, it tells you the story, right? You could see it from COT data. You can see it from, the anchoring, the VWAPs, and just the moving averages are relatively flat. Again, all that being said, if I take out that thought process, I look at this and go, they're building a base to go higher. I mean, nothing is bearish to me in any of these charts. I've been writing that in my note. I don't see a lot of reason to be bearish, but I don't see the volume coming in. I don't see, we see buyers on the dips. We're not seeing them on the rallies. We're not seeing any moves of any significance higher just yet. But if we do start to see it, I think technically it's set up for a potential rally. And I would like to see what the COT data does, and to see what commercials and large specs are doing. Now let's go to the ES, and we can go back, and I think this is, I didn't plan on doing this way, but it's turning out to be that way. Let's go back and look at where the COT data was the heaviest for the S&P, and you can go back, and that's basically mid-March. So let's go back to that point, and I'm going to anchor a VWAP from there, and I'm kind of curious to see what happened there. So that was like basically right there. So I'll take this, and I'm going to anchor it back to there. And obviously with the S&P, and we go back to the COT data real quick, you can see that commercials have stepped in since then. Large specs have turned sellers of the rally, and commercials have turned buyers of the rally. And so when I go back and look here, not as clear of a story as what you would say with the Russell, but you could see that the large specs that have been getting short or been sellers have now looking potentially to get a little bit squeezed here, so commercials remain long. And if you go back to that key moment where the COT data did start to unwind, that comes back right in this area of the 34-day moving average, which is 5720-ish. Again, if there is any sort of pullback, I would like to buy it. I mean, barring any news, it depends why we pull back too. If it's just no news and just natural pullback, yeah, I want to buy equities. I mean, you're just not getting it. I mean, you're getting small ones that just are auto buy. You and I talk about it. So again, I think that that's supportive of that. Let's go COT data real quick here with NASI. NASI's big spike for the large spec. So this came in April 25th, and that's where you had the long specs at the most. Let's go back to where that would be here. So that's on that point. And when you look at it, also interesting, the VWAP comes right at the 34-day moving average, pinned off of that low, that key point where we're seeing COT data as why I'm triggering and anchoring to that day. Again, looks as though a little squeezy, a little potential for, push higher when you look at technicals alone. And going back to COT, you just don't have enough positioning here, I think, to unwind it one way or the other. But nonetheless, when technicals are bullish, and I see that from the VWAP that the market has stayed steadily bid, I mean, the buyers are in control. I mean, again, what do we try to do here in the morning with Tape Talk is, give the overall environment. It is what it is. I mean, it is a consolidating period of time that still favors the long side. You don't have full participation from all of the markets. If anything, you have an unwinding of positions on this recent rally, which also explains why the tape feels the way it does. When you look at COT data, you had commercials and long specs unwinding some positions. I think that explains a lot. Also getting into rollover. We're also in the last 30 days of this, these pauses where we know they're coming in on July 9th. I remember that day because it's my birthday. I'm reminding all of you in case, gifts or something. Pharm, I don't know what we're going to, I know you're doing something for me for sure. I don't know what it is yet, but you got to do something for me. But all kidding aside, that's why I think we see this. And so we try to paint a picture behind the scenes. And again, it tells me it's short-term day traders, stay true to your processes. Don't look at really the bigger picture right now too much for any leading indicator. Really short-term indications are all you really need. Just don't overstay your welcome right now. I think that's the key, small and smart. You don't need to be aggressive with anything. You're not getting support from the bigger picture to tell you any which direction that you'd want to be in. As a short-term day trader, a lot of times you're going to want to look at the daily or the weekly chart to say, I'd rather lean long or I'd rather lean short. Obviously, I think you still lean long a little bit, but the way that the tape has been, I still believe it's a two-way tape. Using your short-term indicators, stay true to that, and don't worry about the bigger picture stuff at the moment. That's what I see right now in the market, Pharm. Let's go to you.
My man's anchoring VWAPs off of COT data. That's like some evil supervillain type stuff. I love that. Very creative. That's very cool. And I agree. This is just two-way. It's just consolidation. It's just chop. We know that. I agree. Generally favoring longs on dips, and you continue to see that. And it does seem like, maybe the dip is being bought, just steadily, just a little bit higher, which does tend to put pressure on the top of the range. But until we have that upside breakout that sustains, this is just a two-way tape. And we talked about, how tight last week's value area was, and just, maybe primed for that move. But until it breaks, it's really just fading the edges. And if you can get it in good, it seems like what's happening is, last night was gross. I really was looking at that, and it's like, we came in and we just completely broke down yesterday's profile, and it was just like the selling was just nonstop, just collapsing through all these levels that probably should have held. And then, we hit the low, and then just buy program comes on, and it's, no red candles allowed on the 30-minute straight up. So, if you can catch that turn in this market right now, and then just sort of ride the trend to the other side, then to me, that's the trade. We talked yesterday about this spot down in the, what was that, 5860s, 5870s. And you can see we came down there, and if you just got it in there and just held, you were fine. And so, same thing, I guess, last night, if you just kind of slammed that short and then just kind of held on, it was a choppy grind on the way down, but ultimately it got there, so just get it in good. To me, it's just find that one trade, and then just kind of hold some runners, and, you make some money, then, spend some time learning something different, maybe practice with VWAPs or learn a little bit about volume profile. But I think over trading is definitely going to be a problem. In terms of, your intermediate time frames, your weekly, again, we talked about, this sort of multi-week balance. Last week was this, sort of tight distribution. We came up after hours and we basically tagged last week's high at 56. And so we talked yesterday about how, like, until you break that high from last week and sustain a bit above it, we're just an inside week, which again is, definition of consolidation in two ways. So, still, and I'll reiterate from yesterday, I mean, if you break and sustain last week's high, then we could potentially come and take, or test, the trailing week high, which was 59.87 on a cash hours basis. And on the flip side, if we take last week's low on a cash basis, which is Friday's low, then we can potentially test, the trailing week's low. Until then, we're just inside chop. It does seem like, maybe buyers are, again, sort of raising that bid and just buying dips just a little bit higher, and that can put pressure on the top. But until it breaks, it's still a two-way market. And basically what I'm trying to do is, again, favor dips. We got that yesterday, just a little bit, but really you can join any kind of session trend to try to cross this range. And so if the session is in an uptrend and you want to jump on and then just get cautious into top of range, I think that's fine. And then if, the session is in a downtrend and you can get some profits taken and then try to ride it to the bottom, I think that's fine as well. So very much two-way tape until we get that break.
Yeah, I mean, that's what we see. We continue to see. Now let's talk about intraday right now, Pharm. Yesterday you were really spot on in the morning when you talked about, you pinned that low. You were like, that was likely the low, or it was a good place to look. And then really the rest of the day, the stuff that you had talked about came into play. So I'm curious to see, what are you seeing, inside this morning's daily candle potentially happening on RTH?
Yeah, definitely. I'll be honest, like, definitely don't have as much clarity as I had yesterday. I felt like, and honestly, I feel pretty lucky and thankful that, I was able to get this dip. I wasn't sure if it was going to be revisited and I would just be locked out. So that was a gift. But this overnight action has been so wonky. The action late yesterday was kind of weird as well. Didn't really like it. Didn't have a good feel for it. Seemed like very thin participation. So I'm a little bit torn here. I think this kind of 27-28 spot is key. I was using 27 to 32 overnight. There was these massive single prints yesterday, 27 to 32. And I mean, I was surprised that those were lost and offered last night. I was very surprised that broke down. And so, you normally would, look at that and say, oh, wow, sellers are strong. Okay, well, look at this. I mean, look at this move, right? It zipped right back through like it never even happened, right? And so again, I mean, you've got some programmatic buying, programmatic selling that just kind of turns on. And so if you can get it in good when that happens, I think that's the key. So, I still think 27, maybe 28 is a decent area. If we're going to try to break out today, then that's the spot that needs to hold. And if it doesn't, then I think you're coming right back. I mean, we talked about, 15 as sort of being my midpoint. You could use 25 on ES, but 59.15 generally is what you're going to see tagged when you fail at one of these extremes. So I think if we can hold, 27, 28 on any dip, then we can come back up and test, 40s. And then maybe we can test, yesterday's high, 47 to 50 range. And then we've got, the last week's high. So I think 27, 28 is going to be key. Come in, and if we offer 27, 28 from below, then you're looking for 15 and maybe a shot at the overnight low. But for me, it's kind of the same. I'm cautious on rips anywhere up here. I struggle to initiate because it's kind of top of range until proven otherwise. It does look like we have an early week attempt to extend this range to the upside. And I think I'm watching, I'm not going to pull up NQ. We just got a minute, but to me, it's a lot about NQ 470s to 480s. And that'll be kind of like this, 27, 28 spot on ES. I think if NQ can finally hold a bid above 470s, 480s, then it may have a shot to lift those 500s that it's been struggling with repeatedly. So feels like they're trying to break this out. We'll see if it is successful. And on ES, I think 27.28 is going to be sort of a mini pivot for today in terms of whether or not they can break this out. So going to be key to see how cash participants open. It seems like every day the opening drive has just been a massive bid. And then, we see where it goes from there. Yesterday, we got a failed opening drive higher and it got stuffed hard. So it'll be interesting to see if something like that happens. So I want to see today's first move, and then I want to see the counter move, whether that takes us to the IB close, which is the first 60 minutes, or whether that's earlier. That's what I'm waiting for before I decide what to do. And eyes are on kind of 27.28 for that first move.
Yeah, normally when I look at your volume profile charts, I feel like I do get more clarity. Like we said yesterday, I was like, yeah, I like the way that all that looked. I look at it today, man, it just feels sloppy today, Pharm. It just does. I mean, I think everyone's got to really, really be patient on a day like today. Make sure you have confirmation. Like we said, follow your short-term stuff. Stay true to your plan. Don't stay also overcommitted to it because it just seems like it's sloshing around here. Remember, we got unemployment at the end of the week. We are getting into rollover in the equity indexes. Not the cleanest tape in the world that we've seen. The daily still, like you and I have been talking about, still favors the long side a little bit, but we're not seeing it when you get down to the RTH candles or inside the 24-hour candles are not really supportive of a big move one way or the other. So again, Pharm, thank you so much giving us insight every Monday through Thursday. I didn't talk about this with you, I think, but yeah, 20,000 new subscribers since NinjaTrader Live began. We're at 132,000. It's big. We're just passing through week 10, almost 2,000 subscribers a week. If you guys are watching this, make sure you hit like and subscribe for my man Pharm and never miss an episode of He and I. We are on pretty much every day on NinjaTrader Live Network, and hopefully we, with Tape Talk, give people some insight into the market environment, Pharm. It's so important. And so thank you so much for being here, and I will see you tomorrow.
We'll see you tomorrow, Deli.
All right, everyone. Next up, we have Tanya. Tanya, good morning.
Good morning. Good morning. How are you?
I'm doing great. Talk this morning, we had a little economy talk and, just trying to, get a sense of what's going on right now in the overall market, Tanya, because let's face it, it's not been the cleanest tape. Pretty much all the traders I talk to, and I talk to a lot of them, are saying, the equity index has not been the best, not been the cleanest, from Kane to you. We'll see what Merritt says later. We got him following that. I've been talking with Pax. Just pretty much everybody that I speak to is saying, look, it's keep it light, keep it tight. Don't overstay your welcome. We're a little bit of a bull market still. It's the tape is still showing us that, I think, on the bigger picture, but you're not seeing a lot of support. We went over COT data here, which we don't do a ton in the morning. I leave that for Jason Shapiro on Wednesdays, but anchoring some VWAPs and just looking at what's happening. And it makes sense that we're in a consolidation. What is your overall thoughts on this current market environment?
Yeah, my overall thoughts are definitely that it's a tough environment. You can't overstay your welcome. Can't get married to a one-side bias. To be flexible, but also I'm very much not trading too much into it. I'm definitely making sure not to, take low quality setups. So I'm being very careful of the trade that I decide to take. Because the ranges are quite small in the New York AM session. I think yesterday was like a 250 point range, 280 point range, or something like that. When at Nasdaq the ATR has gone down to about like 380, and even so, like the New York AM session is smaller than that. So we're not getting too much movement recently. So I'm not really going to be pressing my edge into it if there's no edge, So it's easier to be bullish than bearish. Most of the days we're having green days, and like we're having those, like Pharm said, sharp reversals at like the first minor sell side we get. So that's why it's important that if you're in a short, if I'm in a short and we hit one minor sell side, then I'll put my stop to break even there. Because the reversals come fast. So yeah, that's basically it. I'm not gonna be like it seems like the market has just been kind of stalling, just waiting for some other high important news drivers. And since we are still kind of uncertain about all this tariff talks, and we've hit a bunch of higher time frame points of interest, it does make sense that we're consolidating. We're not seeing a lot of movement. So that being said, I'm always ready that if the market environment does change, that's why we still show up every day, and we also just adapt to the current environment. So like I said, with putting my stops at break even if I'm in a short and then we hit like pre-market lows. Let's say like yesterday, my first target was London lows, but I had my stops put in there at break even, and that's that. If it didn't go to the downside, it can't be too short bias. It's not like, you don't keep pressing your button for shorts when it doesn't reappear, like if your setup doesn't appear again. So that's basically my thought process for
Yeah.
that.
Yeah, let's take a look at your charts. And while we're getting to those charts getting pulled up, I think that's so important. I mean, as discretionary traders, the number one thing, the only thing we really can control is our risk. And, when it comes to different market environments, for someone like me, I'm always adjusting my risk based upon the market environment. Because if I believe we're in a consolidation, or if I believe we're in a period where markets are going to be tight, I'm taking my position sizing down a little bit. I'm trading smaller. And like what you talked about, protecting yourself, moving some stops to scratch, doing whatever I can to stay in the game. I mean, this is not the time for people to go out there and to be aggressive. I mean, unless your strategy is saying to do so. Some people might love this type of tape, and so I don't want to take them away from that. But you have to recognize as we shift from one environment to the next, understand yourself, understand your strategy. If you are a trader that is using discretion, which most likely you are because you probably have a system in place, understand that the best thing you could do is to adjust your risk during these times. Because a lot of traders are over trading this tape, overthinking this tape, getting too aggressive in moments, and frustration builds. And then, mentally they check out a little bit. And next thing you know, you have a mistake in a tape where nothing's going on. And then everything that you wanted to happen all of a sudden happens a few weeks or a month down the road, and you're not in business. And that's the mistake I've seen traders make over and over again. I know because I've done that myself. So I think it's very important. And hopefully here at NinjaTrader Live, we're helping you every day understand market environment. So when you go and trade your strategies, you become a better executor of that. Tanya, what are you looking at your charts today?
Right. That's a great point. Exactly. It's the hardest thing when you see you've been getting chopped up in a hard environment, and then it changes and you see some like really easy trade, and then you don't even have the money to put the leverage behind that. So here we are. We're like, I just went to the weekly for a second to take a look at that. We're inside last week's weekly candle. And then I'm gonna go to the daily here. I mean, yesterday we had that we failed to go take Friday's low. We held up and we closed above Friday's high. Now we're back up into this wick. I think that's sort of interesting. I'll probably mark out this wick from just so I can see where 50% is later when I go to the lower time frames here. Yeah, I think that we could probably come back up into 50% of that wick. We've been holding these lows. We held that London low. We held that Friday low. So gotta go with the upside bias, honestly. We have this London low here from overnight. It's kind of an interesting, I don't see any displacements on the upside though for the 4 hours. So it's not really my favorite, like seeing all these wicks in either direction. I think that was pretty crazy yesterday, actually, when I was trading that. It was like this wick, and then we had a lower wick right after that. So I don't really love the kind of market that we're in, where the trade is really to go look at that first sell side or buy side, and mostly sell side because the market is bullish. And then, it's more likely than not that we reverse from there and take out the high that took out the low, rather than having more displacement and continuation lower. So that's what I'm going to be kind of taking a look at. I think, we have this huge BPR gap. We can definitely reach up into here, take out this high. I want to see how we react at this pre-market high we have here. This high from like, I think this is yesterday's high actually. Yeah. Yeah, right there from 5 p.m. So that is yesterday's high. I think that, yeah, especially if we displace above it, I would think that this low holds and that we could go all the way back up to here, 50% of that rate of that wick. But let me see on this. I want to see the standard deviation of this failed breakdown lower from Friday. Let's see here. Just gonna take the swing from here. Well, let me see on the 4-hour. Actually, it might be cleaner for me to do that right here and see if that matches up with anything up here. This 50% kind of, yeah, matches up with this 78%. Let me see in this, the one from yesterday as well. Just taking some extensions out here. None of them really line up too much, but I do think this is kind of interesting. This 21,600 level. I think we could definitely get there, but to me, it does seem like there's not much that's going on here. I'm not particularly bullish. I'll see if we displace above this high. And then I would like more bullishness after that. But if we don't, then we could have a nice reversal back to the downside because, you know, this market's very much a two-way tape. I'm not marrying either bias. It can't be too bullish, especially with that huge wick, and there's just like we could kind of just consolidate in this area as well. Yeah, I'm not really too keen on this market, especially seeing this. I'm bullish. We're holding up the upper half of yesterday's body of the candle. I think we can retrace it back up into the higher ends of this range. I don't really think, I think that, you know, with the ranges that we're getting today and already, and NASDAQ, with that ATR I always think about, I don't think we could push that far up into it, but we have 10 a.m. news. Let's see, 404, we already went 160 points. So we can go like another 200 points or so. So I wouldn't think that we're going to take out this wick, but that's why I think that we can get back to like 50% of it, 720s or so. Let's see. Yeah, or 680 is actually it. And for ES, I mean, what was interesting about the S&P yesterday? It started off weaker, and then it changed. The market environment changed, and it started being stronger than the NASDAQ, which is why I especially wasn't looking to go short again after 10 a.m. after I got stopped out at break even. You know, we had that nice flush lower at 10, and then got stopped at break even, and then ES was retracing much higher, fat and faster to its new high of day rather than NASDAQ. So it's those kinds of environments I'm taking a lot of precaution in, because it seems like there's a lot of rotation going on like all the time, and doesn't mean, to me, that means kind of like there's not a lot of market participation. If we keep rotating, there's not like one index that I particularly want to trade over the other, because if we just keep changing, which one's the stronger one, right? So yeah, that's my analysis. What do you think about that, Deli?
Yeah, I mean, don't chase rallies, don't chase breaks, stay true to your short-term strategies, everybody. You know, keep it small. I mean, stay in the game during times where volatility is decreased and you have, you know, choppy environment, not to mention rollover. I mean, we didn't talk too much about it. You and I talked, maybe not even Pharm and I, this morning we did, but, you know, we're getting into rollover. You know, you had metals roll, you had bonds roll. We're now getting into a rollover into equities. And I still think, I mean, it's not really pure rollover time just yet. Rollover is still going to be the next, probably at the end of this week and the next week is more of when the rollover really takes hold of it. But ultimately, it's just a time where we're in a holding pattern, not only on the charts, we're in a holding pattern with news. We've got Friday's unemployment. You're coming off of, again, a tale of two big tapes this year. I think that for traders, we have to go back and look and see. We had this big move lower. We had this big move higher. It's not a big deal to see us be in a consolidation for a period of time that ultimately still is this bullish tape. We've just gotten into an environment now where we're just not continually breaking out. And I think that's the adjustment, right? And so don't get too married to anything, as you spoke about, and don't get too aggressive inside the middle of these tapes. Next up, we've got, Merritt, and he talks about his edges on the edges. To me, you really have to be trading on the edges in this. Trying to do too much in the middle is where I think everyone's getting chopped up in these markets. And, I see people tweeting about it, posting about it, talking about it in chat here. And so slow things down right now. We're not quite into summer in terms of the calendar, but it sure feels like summer markets. But Tanya, that's all the time we've got for today. As usual, I appreciate you. Monday through Thursday, Tanya is on with us from 9 to 9:15, and on Monday she streams all day. Always love having you on the show every morning to get your insight into the day. Thank you so much, and we will see you tomorrow.
Thank you. Good luck and good trading, everybody.
All right, everyone, it's Tuesday. I see in the chat some people say, well, Tuesday is Taco Tuesday. Yeah, that's true. What else happens here on Tuesdays? I'm trying to think. Oh, that's right. It's Trade the Open with Merritt Black. My brother, look at him. Did you see the picture I tagged you on that somebody in NinjaTrader Live did with me at the mustache?
No, I haven't.
I tagged you on it. You got to see it. I look like Super Mario, dude. It's unbelievable. It's terrible.
I can't wait to see this. I'm going to have to pull it up during the stream.
Oh, I mean, that mustache is coming in full right now.
Can pop that thing up. Like I want it bad. I need it.
Well, I tagged you on it on X. You could put it on there. I'm not going to share my screen and do this. I'll let you do this to me. Look, I'm throwing you a layup right now, man. That's what's happening. I'm throwing you a layup, okay? And, I tagged you on it, and I'm like, I swear to you, when you see it on X, go to see where I mentioned it to you, and it is either I look like Magnum PI or I look like Super Mario. I'm just not sure. We'll see what chat says about this. But how are you doing, man?
I'm good, man. I'm on vacation here. Got a little beach house with the family. We've got you might hear some noise. We've got 6 kids here from the ages of 2 to 15. So it's a full house, and we're just right on the beach here having a blast.
Excellent. That's fantastic. And thank you for being with us while you're on vacation. I know, look at the commitment you have. I know you've got this, the winning streak you talk about and everything you've done. The only loss you've really had, well, I mean, of course you've had losses within the stream, but Leo, I don't know, he still talks about, I don't know if you hear it. I mean, Leo is really holding this over your head. I mean, I don't want to say nothing, but you know how Leo is. He's kind of digging at you behind the scenes. I don't want to have to tell you this on air, but it's happening.
For him. Just throw him this bone, I mean, that's really how I feel about it.
Oh man! All right, let's take a look at the charts. Let's see what we've got going on today, and then maybe eventually you'll see Anthony Super Mario. I'm sure that picture will come up at some point, and maybe in a Merritt screen. Okay, doing a little. Is this a little Trade-A-Vate today?
That's
We've
right.
Got the web version going on here.
Shout out to NinjaTrader for providing a platform where when you do travel or what, and no one told me to say this, I'm genuinely saying this. You've got that nice mobile online browser-based thing that you can pull up and do. So it's good. It works well. I've already, made a few scalps this morning, just kind of like, tested it out and everything. And it's great.
Yeah. People ask me all the time, why don't some of the traders use the DOM? Or the DOM, or there's this whole debate between VWAP and VWAP, or it's the DOM, it's the DOM. I call it the DOM. I don't know why, but you can use that on Trade-A-Vate. Of course, there's a Super DOM as well. Our traders just here on the NinjaTrader Network are choosing to be on chart trading. I mean, that's, of course, a choice. And, of course, we have Trade-A-Vate as well, and you can use your NinjaTrader login. There's some cool stuff coming out on the web platform. That's going to be interesting to see what people think towards the end of this year. But show us what you got today, Merritt. What are we looking at?
I think you need to have a reason for it, right? You need to that needs to be a little incremental edge for you because of the way that you're able to see orders stacking and pulling or whatever it is. You know, if you're just using it to use it because you like the way it flashes the colors and moves around, then it's probably not, something that, as I always like to tell people, every single thing you look at, right, for your chart layout and everything, it needs to have a job description. You need to have a reason for why you're looking at certain things. And if it doesn't have a good reason, probably need to simplify and get rid of it.
No, I mean, that's what I love about you. You always set the tone for preparation, know why you're using it, and I love that. Today, we don't have your normal chart set up, so I think this is an interesting kind of situation we're in where maybe you are traveling, or maybe some people are trading abroad, or they're trading away from home for a period of time, and they don't have their setup. How do you come in this morning, get set up? Charts obviously look different.
Yep.
Preparation, I'm sure, is as close to the same as possible. But because we're not seeing your normal setup, what are we looking at here? And walk us through what you're seeing into the morning.
It's a great topic, and I do have the chat pulled up on another device over here. I've got a handful of devices in front of me that's sprawled out. One thing that I did a handful of years ago was get I can't even think of the exact name of it, but it's a server based remote PC, right? Like a cloud compute, like all that type thing. There's several different providers. In fact, I think Ninja offers it as a Surface. I don't have it through them, but I've never looked into it. And so, no matter what happens at your house or your office or wherever you're typically working from, or when you're traveling, you can have that remote PC that you just log into, and it's always there. It's always the same. It's on all the backup servers and all the backup power and everything. And it's, these huge places that offer that. So that's one thing that I like. And I've actually got that pulled up on my phone to, I have multiple computers in my office at home. And I have a screen share going there. I have the remote server-based PC. I've got the YouTube chat over here on my wife's laptop, and then I've got my trading screen here in front of me that we're looking at on this laptop. So that's kind of a system that works for me. All the way up to, I know people who travel with those little portable monitors, right? Like that's certainly a possibility. Traveling with flying with two kids, a 2-year-old and a 4-year-old in my case, and not a whole lot of room for some laptop stuff or monitors and whatnot as well. But I've grown to get really comfortable trading from my phone, trading from logging in remotely, and now using Tradeovate as my execution platform here as I travel. So, anyways, that's kind of what I do. But it's really important that everybody test that out before you go on vacation, before you're remote for whatever reason. Test out a system that works from a laptop, from a phone, whatever it is, that allows you to still do what you do, not totally takes you out of your element and you don't have things in front of you that you like to see.
No, 100%. And the way of the world now, especially coming out of COVID, a lot of people were going to remote places doing it. I'm traveling a lot on the weekends. Sometimes I'm watching Sunday night opens. I've got positions on. I'm always set up exactly the way I want to be in a remote situation. So, because once you get out of your element as a trader, we all know how we can be. It's easy to, make a lot of mistakes and get into the toilet bowl of mistakes as well. But I'm going to leave you now. Let you set the tone for the day. Of course, I'll be watching. I would look forward to it every Tuesday. Enjoy the rest of your vacation. Again, thank you so much for being here while you're on vacation. And I look forward to seeing, what comes to the markets today. You're the best, man.
Thanks, brother. Good to talk to you. So yeah, in general, if I take a vacation because I need a vacation, if I take a vacation because I am burnt out in the markets and things like that, and that can happen, chat. Like that does happen, especially after kind of periods that we've come out of here where it's been a long couple months of a lot of grind, a lot of, and by grind, I mean a lot of opportunity, a lot of volatility. So I've been trading very actively, many days, many more hours per day, right? More trading work than kind of normal, where I might scalp some in the morning. And then if there's a possibility of holding a position, then I hold a position and I focus on my desk, my students, and other things. Go play golf. Who knows, right? So this vacation is not that. I'm not burnout. I'm fine. And a lot of times when I am on vacation in that mode, I'll trade a little, right? I'll take a look at the markets in the morning, and it's kind of like I kind of put myself in a mode that's similar to, if you guys have been listening to me on these streams, it's something I've talked about, where you do that self check-in in the morning. And if you're kind of too tired, kind of too sick, kind of too emotionally upset to be full on normal session day, you can kind of approach the market with a healthy amount of conservative type approach, a healthy amount of increased selectivity versus what's normal for you. And you can say, look, if a really fat pitch comes my way, I'm going to swing at it. And that's great. But I'm not going to sit there and scalp all day and really just try to be super active and things like that. That's kind of a mode that I go into a lot of times on vacations like this. So anyways, talking about some of these things other than just here's a support and resistance line, is helpful, right? A lot of people just talk charts, just, and that's again one thing I think Crudele does really well on this show, is he tries to bring that out of his guests to talk about more things rather than just the charts. And then of course we get all up into the charts. So, if you guys have any questions about that, I'll be glancing at the chat. And yeah, yep, I'm on a MacBook. Merritt Super Trooper Black. I've for the past 5 or 10 years, I don't know, I've had a mustache for a third of the year or so. It's fun. I like it. So I thought that this little area right here was a nice spot to buy. If we look at a normal kind of VWAP and standard deviation type things that I look at, it was coming along right through these lows here. And there was not a lot of selling on this down move. So that was a nice spot to buy. And I did. And I came out of it just kind of being short term. As you've heard people on the stream talk about today, things have been sideways. Things have been choppier. I wouldn't say that it's horrible chop that this market is in, the past few weeks, but we've seen some more sideways behavior. So I think a lot of these longer term focused traders are a little bit like, well, there's not much to do. There's not a ton of opportunity. For me, as someone who is doing a lot of much shorter term trading, for the most part, it's still plenty good opportunity. There's, order flow type tools are working well. There's good stuff. Hey, everybody. When does structure matter? I know momentum trumps it, but are there extremes when you believe it matters? I mean, so when I'll give you my definition of structure, and that's typically like volume profile, market profile based. Low volume areas are the edges of balance areas where there's been good balance, not just any area, but an area where there's been good sideways consolidation. The edges of that are kind of key areas for me. And so structure, to me, structure actually, you put it, you said, I know momentum trumps it. I disagree, actually. I think that trade location, I think they're totally separate, independent things, right? We measure them both. But for me, structure is more important. There's times where a market will have great momentum up into an area that I'm really bearish from. and I will fade that upward momentum because of the structure, if you will. So to me, as I say on my Twitter bio, I think context is king, and to me, that's contextual type stuff. Yeah, I've with the volume being a little lower than it has been, I've gone down to like an 800 volume chart here just to get a little bit more granular view of what's going on. A lot of times on this stream, I've had something of a 1500 volume chart, so just about cut that in half here for this today. Just about a minute to the open here. Actually, 12 seconds. So let's see what the little opening vol looks like here. Big push, running some stops above some swings. My plan today is to see if I can pick a few turning points like I did off this low here, and just take out some direct momentum scalps and book it as soon as it starts to fizzle out or stall or reverse or whatever. Just going to be a quiet little, like I said, vacation mode, hour and a half scalp session here. It's a good bit of selling hitting the tape, actually. Piyush with a good question, or Piyush. Sometimes the market doesn't show acceptance, like rhythm-wise, inside the intraday DVA, directly goes to the other side. Yeah, really nice selling in this market. So we might watch what happens. We can kind of push this lower and then get a weak retrace. I'd certainly be interested in stalking a short on that turning point. I pick tops and bottoms for a living. Some people say never, ever, ever pick a top or a bottom. That's what I do for a living. Back to the question. So sometimes it doesn't show acceptance with rhythm and whatnot, and we just kind of traverse DVA. How do you enter on those scenarios? Well, whether it's DVA or a big profile-based PVA or whatever it is, whatever the area that we're traversing is, there's going to be times where the market zips across it after being, let's say, below it. It comes back into it. It doesn't give a nice down move for you to trade the turning point like I do and teach. It just goes, call it more of a V bottom reversal, and there's no pullbacks, and it just goes all the way to the destination. And then, as we know, in terms of spectrum of opportunity, how much opportunity is on the table, it's much lower, right? Once you reach the destination area. So the point I'm trying to get to you here is that you just have to accept that not every trade idea, no matter how good it is going to come along with a nice ribbon bow on top ability to enter it and take that trade. You can't access all your trade ideas. The market doesn't always give it. Kind of a spot here. It feels to me like the buyers just got stuffed and we're going to press these lows. That would be a bit of an aggressive trade here. So I'm gonna refrain from taking it at this location, out of rhythm, poor DVA location. But these sellers are really pressing, and there we go, pushing those lows. So sometimes I like to kind of, if I was in full-on aggressive mode, I might have scalped that little stop run through those lows right there as I was seeing the buyers that got stuffed and know that they're vulnerable through those lows, as I talked about in real time. If I'm in full-on aggressive mode, that could be a trade. That could be a little scalp, a stop hunt type play or playbook, as I call that type of play, a stop hunt. Or on vacation mode, right? I'm not in my office with my usual setup and everything. As we've talked about, I've done is a really nice job of having the things in front of me that I need to see, including all you beautiful people in the chat. But I'm not in that aggressive of a mode here. I'm not going to make a lot of compromise with my tools. I've played around with Z-score stuff. I haven't tried to directly compare reaching a Z-score of 1.28 versus a one variance band from volume weighted average price and compare. I just know that the bands from VWAP obviously work really well, and that Z-score is something that's a very similar tool, but you're not, unless you're running it off of something volume based. The question is what's that moving average? You know, what's it kind of working off of? I think there's all kinds of great tools out there, guys. Yes, as you can see up here on this little tab, it tells you what it is. It's an 800 volume chart. Good for you, Red October. Great movie as well, by the way. Man, that was a good movie. The Hunt for Red October. I'm not sure if that's where your name comes from. Sean Connery. Not realistic. Well, that's interesting because I know nothing about that world. That would be I'd love to have a beer with you and you tell me about the real world of that versus the movie world. As a tennis player, I always laugh at the tennis movies when they show people playing tennis. It's ugly. You can tell that they're not doing it. Kind of like the short here. We're now kind of micro holding under some areas that matter. Let's see if we get a little downside momentum. The lows don't look secure. The buyers are not strong. So I just banged into some here. Scale some out. I am trading using a mouse today, so you guys will be able to watch what I do with that. versus my usual hotkeys. You can't see where I'm doing or what I'm focused on being about to do. This might be informative for some of you. So I'm, from a risk management perspective, I don't have a stop in, and so I'm first and foremost keeping the mouse right over that so that if this thing starts to blip up on me, I can come out. If we take another little dive down here, I'll try to work over here. So now I feel more confident. There we go. There's a little bit blip down. We'll try to work something at the bid. Didn't get it. We'll go back to risk management mode. And I'm going to scratch out of it. So tiny little gain there. We took the lows. And I didn't like to see us popping right back above these bars here and kind of holding. Saw a little bit of buyers come in on the tape on another monitor I'm looking at, aka my phone. And so no attachment to the trade. It didn't behave like I needed it to stay in. And there we go. There's those buyers continuing to push. Fantastic trade. Man says, wait, that wasn't even a 10 points trade. Oh, well, I guess you can find another streamer that's that always guarantees you a more than 10 points trade somewhere. They're not all home runs, guys. we see what we see in terms of getting a small edge here and liking the recipe of the mix up of all the variables that go into kind of a playbook trade. And essentially, I didn't take this one. Remember, we narrated the little stop run through the low there because that one was riskier than this one was. This one, we put in a really unsecure low. The sellers were totally in control of the tape. It got a little momentum shift. And we had, in a micro basis, started to work underneath that kind of one standard deviation from VWAP and whatnot. And so I had enough there, whereas the prior one, I said, ooh, too much compromise, too aggressive. So Trader A gets into a position, thinks it's going to work for sure because of the analysis, starts to notice some conflicting information after they get into the trade, is upset to whatever degree that the trade's not working, feels that the market has screwed them, thinks back to how the market always screws them, and then pick whatever results you want from there. But it's not a good place to be, right? That trader's not going to perform at the level, stay as objective as how I was there. Not to pat myself on the back, just trying to help you guys who are tuning into this. Detached, liked the idea, focused on risk management the whole time, even while I was in the trade, hovering over flatten button. Saw the same signs that Trader A did, that I didn't like what I was seeing. Came out of it. It's just a trade. It's just one trade. So kind of dovetailing on that, Divyanshu is asking, how do you react? How do you react and trade further when your bias doesn't play out? It's a great question. It comes back to, how do we see context that day? What's the level of opportunity? What type of line in the sand do we have, right? You can't have a bias. You can't have a blind bias. That's what makes bias a bad word in some circles. People say, I don't like to trade with a bias. Well, do you ever choose to go long or go short? There's some form of a bias in there for direction. Um, People who just say I'm bullish and that's the end of the story, that's a negative bias. A good bias is always attached to a line in the sand, an area where if it goes through there, and as Divyanshu, if I'm pronouncing that right, um, is asking, how do you handle things when your bias doesn't play out? So in some situations, there's going to be opportunity on the wrong side of that initial bias. That's called hypo 2. That's called an acceptance picture shift, to where if we were bearish below an area and now we accept above it, we're going to be bullish and looking for long opportunity. And if that fails and we get below the area again, the short's back on the table, right? A couple hours later or whatever. Um, that's really using rhythm and acceptance, and obviously all the narrative reads with NADRO, the methodology that I teach. It puts you in a good spot to do that. Now, there's not always opportunity on the wrong side of a line in the sand, because let's think of a different context. We're bearish because we're below a certain level, let's say. Above that level is a big chop zone that we have no interest in, and there's a bunch of dissonance between time frames or whatever. There is no trade above there. There might be a big no trade zone, and then if and only if we get above an area even higher than maybe the bear line in the sand, which we were initially under, then we might be bullish. So that's another common contextual situation. Might stalk the short here again. Let the buyers push up. A little bit of a weaker push on the second push up here. This one was obviously a nice little strong push, but this one was not. So if they were to start to cave that down, then that's not good for buyers. Thank you, Lone Wolf. That's very kind. That was an interesting little moment here. It's hard to tell, but there was this little down candle here that just threatened to break down. If we were to draw kind of like a little, what I call micro trend line across these lows, it was just a couple ticks away from threatening it. And the sellers kind of pressed right there, but there was just a little moment of buyer absorption on the tape. And then no short trade for me, and the sellers got caught there, and now we're seeing them puke out of those short positions. Well, Tolman, I guess that just depends on what time you roll out of bed. There's in the markets that we've been in the past couple months, man, it's you could roll out of bed real late and catch some good trades. So I don't know. Yes, I am, Mike. I do feel sorry for you, West Coast folks, or heck, those of you in Australia or Japan or whatnot. That's rough. That's rough. How often do I trade outside of, let's call it, well, you said US hours. So I'm going to call that US waking hours. I think that's what you mean. Um, Almost never. Yeah, that's right, Alfred. We do have some jobs numbers at the top of the hour here in 10, 11 minutes. Yeah, Woolongaba, unless you're going to be content trading the, Hang Seng futures or whatnot. Low brings up a good point there. Early mornings, but done, that means done early as well. Grab the surfboard and go, right? Yeah. Yeah, that's as long as you're okay with like needing to go to bed at 9 p.m. To me, it's not the getting up early. That's you get used to that. Just kind of a normal rhythm you could settle into. It's the, oh my gosh, like it's 8:30 and I need to be thinking about getting home, getting in bed to make sure that I get my 8 hours or whatever. That's to me, not that I'm a night owl, but that's the style that gets cramped, if you will. So Gabriel said, took my scalping course. We don't talk as much about context there. That's true. When are you fading and when are you not fading? Well, look, I mean, even within the scalping course itself, you can use contextual order flow. You can use something simple like a balance from the prior session or the overnight session or things. So for true scalpers, context can matter a lot less, right? It's the exact same thing. We're just talking about worlds apart here. It's the exact same thing as a normal day trader who holds positions for an hour and a half to say, well, the current Fed speak doesn't matter to me, which would be appropriate. It doesn't. So a very, very short-term scalper can say, well, where we are relative to the VWAP for the year doesn't matter to me. And that's true. It shouldn't. So as I talk about in the course, you don't have to have the context. I like always being aware of the context. And then I feel like, I'm an archer with a couple different types of arrows I can pull out of that quiver in terms of longer term opportunity from really good trade locations. I've talked about some of those on this stream over the past couple months versus a day like today where we are in a trading range overall. We aren't really trading from some significant contextual edge. So I've put on 2 or 3 scalps today, and yeah. But if you want to learn context, it's a magical thing. I don't toss that term around all the time. Nadro is really, really good stuff. Cool. Ultimately, a lot of traders that I do believe in the Brett Steenbarger phrase, first get better, then get bigger, then get broader. A lot of traders try to broaden their bag of tricks too quickly before they actually really kind of master one, right? And I'm not even talking about the people who are just out there spinning their wheels, cycling through a new indicator every day, just trying something, right? That's obviously not going to get you anywhere, but some of that has to be done to find something that you like using, enjoy using. But even someone who finds something like that, again, you have to, again, I'll just say what Steenbarger says. First, get better, then get bigger. So if you haven't scaled up trading and started to get bigger in your trading, you're probably not ready to get broader in the things that you're looking for and doing. It's a great progression to take. What minimum account size is preferable as a buffer to trade the ES? Well, this account that I'm trading on this stream with you guys, I typically keep like $5,000 to $7,000 in it, and I'll trade, you know, a 2, 3, 4 lot NQ in it. Now, granted, I could lose, you know, $2,000 or $3,000 in a session, and need to kind of reload that account to get that intraday margin back up or whatever. But you don't need a lot of money in an account to trade futures, right? With day margins. So I've preached that for years. Only keep what you need in an account to do what you want to do in terms of size and risk taking ability. Maybe, keep a couple days of daily loss limit in it on top of whatever margin requirements you need. Obviously, if you're holding overnight, that changes things. You're going to need that, 22, 23K per contract. Yeah, you could put a 5K account and trade MNQ, no problem. That would be perfectly doable. That's right. So I'm glad Wulongaba is chiming in here, helping me make my point a little more clear. When I'm talking about only putting a certain amount, a smaller amount in a trading account, I'm saying that within the context of you've got the assets to take a small portion of and put physically in the trading account. If all you have is a tiny amount, then the question arises as to whether you are financially ready for trading futures. Now, obviously, some of the micro products you can really keep risk super small, and it's very feasible with a low amount. But if you're really trying to, for those of you who are trying to take that leap, work towards quitting that day job, whatever that is, you need some, substantial assets to not only buy you time in terms of not needing to pull money from your trading account to live. You do not need that pressure. It's not going to work. And then also separate pile of money somewhere that is trading account capital, and then you only put what you need of that in the trading account. That's always been my recommendation. I blew through some, decent size trading accounts in the past because I put it all in there, right? And then if you do let yourself down and go on tilt and you don't have a risk manager because you're not trading for a prop desk like Apteros or something, it can all slip away all very, very quickly, very easily. All right, just under 2 minutes until the news. Scott, I don't have an auto liquidate set up on this account because it's kind of like it's only funded to the level where I can trade for you guys with a handful of full NQ contracts and just showcase the trading, right? It's so if I if I have a bad day, I'll run out of margin. I won't be able to continue trading. So it's kind of like a built-in auto liquidate. No, everyone on my desk does not trade. Not everyone on my desk trades in the Nadro style. Definitely not. Anyone can go to our site, apterostrading.com, and see if you like the parameters for our desk. We start you out with a $10,000 real live money drawdown. No trailing drawdown, none of that. No games. Let's put it that way. We take risk on our traders. And not everybody trades the way I trade. Not everybody trades with Nadro. If you make it onto our desk, scalping course, you have it for free. Nadro course, you have it for free. You need to spend an hour with me, you have it for free, right? I'm here for my traders. They have a direct line to me. What they need, I'm here for them to help, because they're trading my money, right? It's not some, sim funded thing. They're trading my capital, and I want them to make money for me, right? And for them. Little different model here, if you pay attention, guys, to what Apteros is than a lot of what's out there. All right, the news is out, obviously, about 20 seconds ago. Little blip up, little speed of tape increase. Apterostrading.com. APTEROS. Apterostrading.com. If you click on the link in the description for my name, if you go to my Twitter profile, you can you'll see the link to our website is right there on my bio. Apteros means wingless. Wingless. It's kind of a long story, but it comes from the a statue of a goddess outside the Acropolis in Greece, or on the Acropolis, I should say. And typically, Nike Athena has wings, and they made her wingless. So they call her Nike Apteros because they wanted to keep that victory in the city and not have her fly away somewhere. And so for me, it connects with victory, keeping victory, and staying grounded, staying true to core auction market theory principles that I believe work for markets, those type of things. Only 197 likes here, guys. It means a lot to us if you guys could get on your mouse and just move it a few inches and hit that little thumbs up button. If you appreciate myself and other guests on this show for coming in and mentoring you and sharing what we know with you and showing you our trading live, if you appreciate that, give us that little thumbs up. It does help promote what we're doing here and make it successful so that we can continue to do it for you. Okay, so there's just nothing super interesting about this. We're kind of now just kind of grinding into that +2 standard deviation from VWAP, which is not a great trade location for catching longs. It's certainly something that I think looks like Stowe has figured out a nice little trade with that kind of grind continuation play. For me, if I'm not in from wherever I was, I guess it was here, right? Unless I had held that standard type of Nadro entry trade for me, you're not going to, you saw me go for, wait a second. I was long from here. Yeah, sorry. They look how similar these patterns look, just to let you guys inside my eyeballs and mind here. You've got this weak looking low, 1, 2, 3, 4 kind of bars at the same level, little stop run through it and a turn. And look at what we have here. stop run through it. Oh, excuse me, the weak lows, 1, 2, 3, 4 kind of bars there, stop run through it and turn. Being aware of where these kind of things happen is great. So anyways, very similar patterns there. I was long on this one, came out. I was actually short into this one. Didn't like what I saw down there because I understand that bullish setup. I was long for one of them and short into the other one, hunting the stops through the area because I liked what I saw in terms of on the tape on the bearish side of things. So this stuff is great. This trading is fun. Look, it seems like everybody's coming up with their own term these days for the space in between two consolidations, right? Let's talk about it. So you have support and resistance people. You got a balance area, you got a breakout, and then a balance area. Guess what? There's a space in between those two balance areas where there was imbalance or a strong trend, an impulse, whatever. Okay. And then you have profiling people who come along who then are looking at those balance areas, whether TPO time based or whether volume based. And then what do you have in between those two balances? You have a low volume node, or you have a low usage area, or you have single prints even on a profile. Okay. So there's another way of seeing the same thing. And then I'm not even going to give credit to say the name of the person or the other thing. I'm just not it's just not my thing. You come up with a new name for it, right? What else? Is there another way of trying to think? Price action, profile based, and then just rename it based on, again, going back to price action based. So yeah, guys, it's, nothing new. See if the sellers can press a little here. Scaled out of a third. Scaled out of 2/3. Throw a stop in. And flat. Honestly, it was nice job, Tallman. Seems like we were on a yeah, keep it simple. Somebody else grabbed a couple points out of ES short right there. If you're watching the tape, if you understand order flow, you can see some of these things. Think about it. I did nothing for a really, really long period of time there. I just talked with the chat, answered questions, and then you can get good enough to see where there is likely to be some more direct line momentum. Do I always nail it like that? No. But you can acquire the skills, guys. That's one thing I love about doing stuff like this. Why am I doing this? Well, Crudele's my boy. Why am I doing this stream? Crudele's my boy. I think that NinjaTrader is a good company, a good product. I want to grow my proprietary trading desk. That's why I'm here, right? Just real talk. I have nothing to prove anymore. I've been doing this a long time. I was I was streaming when I was working in New York for other prop desk, S&B. I was doing all that stuff long. Some of you have been following me for a long time. Um, I'm here to hopefully convince some of you that Apteros is a place where you'd like to build a career and be a part of and be on my team and whatnot. So appreciate the likes. Up to 335 now. I don't know. Let's see. Very, very atypical looking stats for me here so far. To have a $400 loss and only a $390 largest win, and that going with the averages as well. I think I took the $400 loss. I think that was before I was on the stream here. I guess we could see. So anyways, I don't like to analyze stats while I'm trading, but you guys asked for it, and there you go. So yeah, very atypical for me. I'm typically what's my 77% win percent. That's not how I trade. And if I continue taking trades here, we will see that my win percent will drop and my risk reward will drastically increase. So just don't think that me trading and even I don't even like people to even fathom trying to target a 77% win percent. It's preposterous. Don't trade that way. Trade where you skew risk reward in your favor and flip a coin on the outcome. I might do I think Stowe did a segment on stats or something. I might do that at some point and come out with like all my stats over the past, 10 weeks or whatever, and we could like really dive into that and whatnot. But back to the markets here. These buyers are not looking super strong as we lift here. I'm really not, short biased here today. I understand that I've taken certainly more shorts than longs. Probably my favorite trade that I took today was that long just before the stream. Yeah, I'm not trading with a strong directional bias today. I'm trading based on kind of short term where I think I can get a little burst of momentum and things like that, little stop runs as you've seen. Saw this is not my main trading account, brother. There's no point in trying to pull up a bunch of long-term stats and things like that. Sellers pressing here a bit. It's a decent up rotation. How was the job market? I haven't even paid attention. I guess it's on the stream here. Job openings rose to 7.4 from 7.2. Doesn't matter to me. I'm just curious intellectually to follow kind of some of that stuff. Doesn't it doesn't have any bearing on my trading. Yeah, sellers just couldn't take it there. I still think the buyers are weak on this up rotation, but so far the sellers haven't really made them pay for that. This market's still in an uptrend. Let's not forget that, right? So shorts are counter to that general trend off the 4 a.m. lows, you know. Oh, someone asked that question earlier, and I meant to answer it. And there's a million things going on here while I'm trying to trade and talk to 1,000 people. I like OHLC bars because I like to see more bars. If you come in here and whoops, here we go. Make a candlestick and oh dear, those colors. Sorry about that. A lot of people look at stuff like this, it's prettier, right? Guess what you don't see that I see, right? Guess what I can't see when I look at a chart like this? What do we not see? What do our human minds get drawn into? Well, I can tell you, it's the last two candles. It's the you get sucked into that tiny world, and whether there's a doji and engulfing a little breakout, you see things that probably aren't super relevant. Now we're seeing some selling here. Let's see if we can get a continuation. Maybe not. Wish I had my regular view, but now I'm stuck here. I'll come out of that. So anyways, when you're looking at a view like this, you just get sucked into the little smaller micro short-term stuff. Oh, got caught again. So let's get the chart back how I want it. When you look at it like this, you focus more on the rotations. You focus more on more information, slower information. So that's why I like it better. Big push from buyers. Sod, I'm gonna tell you, you have no idea what you're talking about. I'm not wound up. It's all good. It's just you can trade ES with a $5,000 account. I tend to just like the speed of NQ over ES, and when there is like everybody says, right? Everybody kind of gives the same answer of who likes NQ. Sellers are back, but the past couple times we've tried the short here, they've kind of gotten stuffed, but they are pressing. I just try to look for aggressive participation and how price reacts to it. That's pretty much reading the tape in a nutshell. Might try to sneak in a little momentum lot. Might be just a little too sideways and quiet for it, though. Just haven't had great momentum in this area. And for some reason, some of the, my past two attempts to short here have gotten stuffed. So I can be a little more cautious and forego that. Sellers should be able to do a little better job of at least clearing out some long inventory. So this is definitely getting to a point where if I feel like the buyers are really coming back in, I'm just going to immediately bail on this at this point. Don't know what's going to happen next. So we see there they go. They really push them. Still pretty weak. Scaled out of some, and we'll end up scratching the rest here, I assume. Yeah. So flat here. Little another little scale and scratch as the we got that stop run, and then the buyers just took it right back immediately. More of a spot to go for some upside momentum potentially. All right, how we doing in the chat? Rob, did you see my question? No, I did not. I've been looking. I haven't been looking over here at the chat. Tennis, yes, tennis was my big focus. Robert, just re-ask it if you don't mind. I can't find it. Jay, no, I don't think trading equities is easier than futures. I do not. I think some people would argue that there's more edge there in certain situations, rather than trying to extract edge day after day after day out of the same global kind of futures market. I wouldn't disagree with that, but the implementation of it and doing it is very different and just as challenging. Biggest takeaway from SMB? That's a great question, man. Honestly, I mean, the first thing that comes to mind, this may not be, if you gave me a week to think about it, it may not be my final answer, but the first thing that comes to mind is the, how do I start saying it? I can be kind of a critical person, critical, negative, more critical than negative, if that makes sense. Especially on myself. And Steenbarger noticed that in my review work, and it was really the first time I had the thing that SMB does as a whole, including what Steenbarger helped me with personally, is making sure that you're not just sitting there and berating yourself every day for what you could have done better. That you're also building from your strengths. You're also looking for things in your trading that you are doing a good job of and things that you want to continue to build off of and leverage. So that's to me one of the biggest, most impactful things. Because I just like to, good day or bad day, I like to beat myself up at the end of the day. I think the longer the divergence over time, the less impactful it is to a short-term trade decision. Let's see. Rob's question came back in. Do you ever use a naked VPOC as a destination on a daily chart? Not on a daily chart, no. Well, maybe the VPOC from like last year or something, I guess, if I have a yearly volume profile up. But certainly on all kinds of time frames, whether it's composite market profiles, whether it's last week's volume profile, things like that, or some stuff that I look at on a daily basis. And yeah, you know, I think when there's a breakout, it's more rare that you're at all-time highs, right? A lot of times you're trading where we've traded before. So when you have a breakout, a lot of times what the market goes is it reverts to, even though it's a breakout from recent balance, it reverts to an older area of established balance. That's what markets do. So certainly, I don't get super granular with the actual VPOC, right? That's not something that's like, this is the price level of the VPOC. It's a big deal. Um, it's more of a general area of less precision, reversion to a prior area of balance. That's how I see things and apply things. Yeah, it's a big deal. And I think a lot of traders are have the natural tendency that I had of being a little overly critical and harsh on their trading and their performance. So I'm sure it's a lesson he teaches often. When someone passes the basic tryout for Apteros, what's the next step? Open up a sub account, under the Apteros corporate account with the brokerage. Get you a sub account up. Talk about risk parameters we want to start you out with. Sit down with you over a Zoom call and start to understand you as a trader, your style, the tools you're using, the timeframes you're trading. Go through your stats from the tryout, and I might have some feedback for you based on what I see there, and just get you onboarded onto the team, get you on our Discord, all that kind of stuff, and get you trading and start iterating, seeing your daily reviews, and hopefully get you better. That's what happens after you pass our tryout. If you want to, I mean, I'm not going to keep rehashing it here. If you want to find out how Apteros is different than other places, then check out our website. $300 trial. We don't have 90% off for you, man. We don't have activation fees and intra-trade trailing drawdown for you. Sorry about that. Yeah, it's $300. I need to get promo codes for other sim prop places and start handing them out so I can send the YOLOers out that way. Okay, we might have a potential long setup here. Kind of like what I'm seeing. Let's just see if I get a little upside momentum, a little bit of a shift. Somebody, who said that? Somebody said, I'm ashamed I failed twice. There is no shame in that. I always tell people, if I were to start our tryout tomorrow, I might pass it in 2 days. I might fail twice and maybe then pass it. There's no shame. There's nothing wrong with your trading to have a normal drawdown over a period of underperformance. TR says 60-40 split. I'm not sure if that's possibly a negative comment towards Apteros. Let's talk about that, TR. What prop desk cares more about your performance? Would a prop desk with that gives you 100% or 90% of the P&L, do they care more about your performance? Or would a firm who shares in 40% of your P&L care more about your performance? Who cares more? Which setup? Which business is trying to make money from traders making money? 90-10 or 60-40? Okay, sellers still trying in this area, but they're getting stuffed a little bit. We might catch a little turn here to the upside, as I was saying earlier. Just still haven't seen that moment. I always talk with my guys about believing the turn. Do I believe it? Well, now I do. So I believe that there was energy behind that little move up right there. So is it going to work? Who knows? Does it make sense for my my methods? It does. I do kind of feel like I'm sitting at a cold blackjack table, though. But my process is a better trader than I am. So we put the risk on, even though I don't feel all warm and fuzzy about doing it. Just don't love the way the tape looked into that low. Yes, there was that bit of buying. So anyways, kind of a low confidence trade here. Target for me, I would just like to see, run stops through these highs here, just get some little rotation higher. Not going to be asking for too much. We could start to look to peel something off around there, and then keep an eye on it manually in case we need to come out of some. I'm actually going to scale one right there. I'm going to cancel this limit order, adjust my stop size. I'm going to look for something a little higher, so I can, I had that limit order up there near kind of resistance, but let's see if we get more of a stop run through the area and then kind of manually do it. So if we spike up into the 30s, the 40s, I could throw out something about here just in case it happens real quick and gets hit. But I'm probably going to manually do something. IB, the initial balance, it's not really a factor for me. It used to be years ago, I would track it, but I don't need that arbitrary time-based high and low as an additional way to frame whether I'm bullish, bearish, or neutral in a market. I've got a lot better things that do that for me. So the IB has gone the way of the dodo from my charts. Pretty sideways, pretty choppy here for the past hour. But I like all the trades I've taken here. On days that I'm actively looking for trades based on how flowy and discretionary my scalping style is, pretty much never going to be a day where there's no execution. For my normal NADRO style intraday position trading, looking for good context, absolutely days where there's no reason to get into a trade. For traders who trade like that, most of my students or desk traders, they go multi-market, right? That way you're looking at 3 different markets, 8 different markets, and you do your pre-market prep and you find the ones that are actually interesting with good lines in the sand, good directional bias, good trade location, and then you go look to execute on those. That's a way of getting, because one thing I think a lot of beginner, more amateur traders don't understand is that sample size is a good thing. Sample size is a good thing. Not much significance to a year-long track record where you took 1 trade a month, right? It's not really statistically significant. If you have edge, then it's just like a casino. The casino wants sample size, don't they? Because they have the edge. So with a trader with an edge, if it's repeatable, what's that phrase that Pax says? Repeatable, scalable, something like that. If it's got those things, then sample size is good. All right, don't like what I'm seeing. Buyers tried to push it up near the highs. Sellers kind of slammed it. So I'm kind of thinking I got the mouse on the flatten button here. it's kind of around that break even point. I could adjust the stop. Really don't want to see us press that low there. I'm not putting that order there because it's break even plus a few ticks. I'm putting that order there because if they break down the lows of those bars, I just don't want to be in this play anymore. Even still, we're pushing the high of this little tiny consolidation, and there's really no buying on the tape yet. So sometimes price leads order flow, though. I agree, Futures Trader 33. This is garbage action, but I'm trading very well with garbage action. I am. It's a great session for the low level of opportunity. All right, buyers pressing a little here. Let's see if we get that blip, we get that stop run into those 30s or 40s and take out some shorts and profit from doing so. I'll put my mouse back up here, getting ready to flatten if I see something discretionarily that I just want to be out prior to that stop. And then we'll see what happens. Who knows? Thank you, Mimic. Very, very nice. I really appreciate that. Just still haven't seen the pain. Haven't seen the short squeeze. It could happen imminently. Let's see. I'm looking for that exit door. Okay, it's like a slow motion stop run here. What is this? Oh man, there it is. There's something. It's pitiful. At this point, it's got to, there we go. Now we're running stops. That's it. That's fine for me. Flattened her out. You know, we got right up to the edge of the 30s there. I'm not sure what that high is exactly. I don't really keep up with numbers, but yeah, low 30s and we secured it. So actually got a stop run, saw the speed of the tape increase, saw the order flow come in on Delta and things like that. Ayub, as I mentioned earlier, the trade of 8 here that I'm using is like for execution. I've got a couple different monitors around me. I'm on vacation here at a beach house. And so I have some different things I'm looking at in different places. Well, Mr. Ong, I couldn't say that any particular futures contract has, the best price action for NADRO. I could say that ES, NQ, crude oil, markets like that, very common ones you see a lot of people trading. I think they have the best order flow in terms of using cumulative delta or footprint charts or things like that. But some people love to trade a slower moving bond market, and some people like me love to trade a faster moving, not today, but a generally speaking faster market like NQ. Do I miss living in NYC? No. It's a great place. It's a great place to be when you're young. It's a great place to have fun and travel from. It's such an easy hub to travel from. It's a great place to get into the restaurant and art scene and do all that stuff. In my opinion, um, it's not where I would want to raise children. So when my wife and I were ready to start that phase of our life, we got down to Nashville, Tennessee, and near both of our families. It takes a village. Where's my target for today? I don't have one. Not really a day where I have a strong directional bias read, as you've seen me on this stream and whatnot, long, short, both ways. I'm from Alabama originally. Oh, there's that even bigger stop run right there. Right? You had the stop run through these highs, which I was kind of looking for, and then you had the high of day stop run, which we just got, and it was pretty violent there on the tape. They finally really squeezed out some dating tips. You want dating tips? Date, even if you're not ready to get married, do it from that long-term goal. There's my dating tips for you. Don't waste time sticking with someone that you're eventually gonna leave, not stay with, not want to spend the rest of your life with. Don't waste that time. Date, figure out what it is that you like in terms of qualities and things like that. Obviously that can be a trial and error experience, and that's how you learn things, but that would be the big piece of advice. If you can't see yourself with them long term, get back to the sea looking for the other fish. I think that's the first time anybody's ever asked me for dating advice. Find a guy like Stowe. That's really the bottom line, I think, is find a guy.
You're very too kind, sir. How you doing, bud?
Good, man. How are you?
Good. You trading for the beach right now?
Yeah. A little
Sick.
little vacay mode activated over here.
That's awesome. I remember you told us you're going to the Outer Banks or something, right?
Yes.
Awesome.
Yeah.
That's cool.
Never been here before, but it's great, man.
So, Merritt, what part are you at? Are you up by Duck and Corolla?
Yes, sir. Yep.
Nice.
Yep.
Did you go see the wild horses?
No, but just down the road there by the Harris Teeter is a little place to sign up for that. But yeah, I think some of the older nieces and nephews on the trip here with us are going to do that.
Cool.
That's
super,
awesome.
Yeah, that's super great. I love that area. Been there a couple times.
Yeah, cool.
When I was a kid, that was always the area that, like, when you were a senior in high school, you all got your friends together and got a beach house. We always would go to the Outer Banks.
Oh, okay.
And the cool part is on the way down from Pennsylvania, you drive past Gravedigger, the monster truck. And that's what I remember about the Outer Banks the most.
Right after the giant
Yeah.
ball of yarn.
Yep.
It's
Yeah.
great.
Yeah. Well, now to rent a horse, you're gonna have to liquidate one of your trading accounts. It's pricey.
Oh, me.
Anyway, well, good job
Yeah, I've
today,
essentially
Merritt, by the
only
way.
eaten shrimp and crab since I've been here. Delicious. Love it. I love seafood so much.
So, Merritt, you're from Alabama. Where at in Alabama?
Florence area, Florence Muscle Shoals area, the very northwest corner on the Tennessee River.
The Swampers.
That's right. Yep. They can pick a song or two.
Yeah.
Yep.
There it
That
is.
is that
It's
is
a
an
great
area.
documentary, everyone listening. If you haven't watched the documentary Muscle Shoals, it's the area where I'm from generally. And this just crazy thing happened back in the day where everybody from the Rolling Stones to Aretha Franklin and everyone came there, and it was something magic about that little cinder block recording studio there. So it's a cool story.
It's a great documentary. It's entertaining. It's fascinating too.
It's got good music in it while you're watching it.
Yeah. Yeah. So
That's so
awesome.
good. We all three of us were just ready to jump in and say that immediately. That's cool. We're all on the same page.
Yeah. By the way, Birmingham, the surrounding areas of Birmingham are just beautiful.
Oh yeah, I went to school in Birmingham, and it's a great talk about an underrated food town.
Wow.
Highlands Bar and Grill, Chez Fon, Bottega, all those places. Some Hot and Hot Fish Club, and some new places that I haven't even. I mean, just fantastic food scene.
Yeah. It's awesome, man, for sure. Yeah, I'm gonna buy my farm out there when I retire. I'm gonna buy a farm in the neighborhood.
Outside of Birmingham.
Yeah.
Okay, we got to talk more about that.
Okay.
That's great.
Yeah.
Look at Franklin, Tennessee too, though. Check it out.
Before we moved from Chicago, that was one of the areas that we looked at to move to when we fled Chicago.
You could get 50 acres there for, I don't know, 37 million, something like that.
Yeah. I only had 36 million at the time, so I had to keep moving south.
Oh, Jim, that's funny.
Oh, good. Anyway, well, Merritt, man, a great day today. Appreciate you being here with us.
Squeezing a little lemonade out of lemons today. Yeah, I felt good about the session.
Yeah, for sure. Great advice all across the board as well. I really appreciate you. But I think you're ready for the beach. It sounds like. So we're gonna let you go, and thank you for being with us.
Cheers, y'all. Good luck.
Good to see you, bud. Thank you, man.
See you, Jim.
All right. Thanks, Merritt. All right, Stowe is in the house.
What's up, Jim? How are you?
Pretty good, man. Pretty good. And yourself?
Oh, I'm doing good. Having a good day today.
Well, that's good news. It's you got a trade going? Yeah, there you go. You got a trade cooking right now.
I do. Yeah. I felt better today. I felt some better vibes. So, I kind of got back to a little closer to business as usual. Just getting that base hit yesterday and, talking through all that stuff was really helpful to me. So yeah, I feel like I'm seeing the market at least good-ish. Yeah. I was thinking a lot last night too. And I remembered that typically when I reach a pain point, like I'm in a drawdown or, I decide to make a decision like I should really stop pressing for this breakout. That's sometimes the day that the breakout happens. So I'm kind of remembering to inverse my my own feelings right now, and so that's why I'm still holding this runner. But for the first time ever, I have moved my stop into profit. Yeah. So I just want to throw that out there. It's a first. I don't like it, but I've done it. So
I like it. That's my technique. I do that all the time. I know maybe you lose some potential on the trade in the long run, but you do get, picking off a little in the middle. There's nothing bad. There's nothing wrong with that.
Yep. Yeah, I'm actually going to trail it. I'm doing more thinking about that process too, like when am I really wrong? Not necessarily trying to hold, the trade for a million years. I never really did that before anyway, so I think that might be a byproduct of the stream. I'm not sure. So yeah, so I'm just going through, picking apart little holes in the game, seeing if I could patch them.
Yep. No, I love it, man. It's looking good. So I'm going to be hopping over in the chat. I will be keeping an eye on everything and wish you the best of luck today trading.
Okay, sounds good. Oh, quick, before you go.
Yeah.
I sent you all your prizes, by the way. They should be showing up in a couple days, and I did go a little overboard. And I just wanted to preface that I did buy some things that are Italian food related. You can judge them as harsh as you want. I know that you pride yourself on your cooking, so I felt a little nervous buying Italian food for Cags himself, but I went for it.
All right. Well, I'm gonna, totally unnecessary, by the way, Stowe. So I greatly appreciate it. 100%. I will be honest with you on my critique.
All right. Sounds good.
All right, man. Good luck.
Thanks, Chip. Morning, chat. Good morning. Hey, Shab. Oh yeah. Wait till he sees what shows up at his house. It's gonna be hilarious. Morning, Tracy. How's it going? Hey, morning, Omni. Morning, chat. Good to see everybody. Yeah, that Muscle Shoals documentary is incredible. I like documentaries about pretty much anything, but that was a really good doc. I watched it. I've probably watched it 5 times. I mean, because it's just good music to listen to too, so you can just throw it on and chill. But yeah, I'm feeling pretty good today. So I wanted to start off with this story that maybe some of you have heard from Twitter or from Leo. There was a time, I can't remember when it was specifically, but it was many months ago, like when we were at all-time highs, and I was really struggling with trying to get good at shorting. This is a common thread for me. I always like get into a phase where I'm like, I can figure it out. And I I was talking to my friend AJ, who was the other person other than me and Leo on the podcast that we do. And I was like, you know what, man, I'm just done trying to sell this market. Like, I'm just done. I'm done trying to figure out how to short. And sure enough, he goes, that's cool. Also, by the way, when you start to feel things like that, that's typically a top, And so he said, I'm happy for you, but I'm probably going to fade that. And that day was the top for months. So I realized then that having that overwhelming pain point happen and, cause you to change part of your process, cause you to adjust too much is sometimes like a good sign that you are at that inflection point. Like the market is wearing you down to the point that maybe the thing that you've been avoiding is about to happen. And so I was thinking about that last night because, I said, I need to start taking base hits. I need to size down. Obviously my process is wrong. All this stuff just based on that bad week. And those are all good ideas. We should do those. But in the back of my mind, I'm still thinking like, is this the day that we break out of the balance? Because I decided to stop trying to break out of the balance. So I don't know. You can harness your own emotions in lots of different ways for personal alpha. Good morning, everybody. Morning, Deli. Yeah. Woolungaba. These are in fact volume bars. I do 750 volume. So we're coming up to we'll go through the day in a second, but we're coming up to the big top of this balance. And it's so cool that we're actually gonna maybe see its reaction together, because that doesn't normally happen. This is the spot of this false breakout. There's all this activity right here. And, the top of the balance is roughly 680. We look at the 5-minute profile, zoom in a bit. We can kind of see we left this volume up here. So 700 is probably more of a realistic inflection point. But yeah, this has been the inescapable balance for 2 weeks, 2.5 weeks. And it's what's been grinding my gears insanely hard. So, yeah, we could break out of it, and it could be fun. Today is kind of a weird day. I noticed that ES and NQ have flip-flopped their leadership a couple times today. In the beginning of the day, NQ was making new highs and ES was just kind of sitting there. And then I noticed the ES was just sitting there or NQ was just sitting there while ES was making new highs at around 10:30 today. So I don't know what that's about. But that's on my radar. All right, so we're coming up to it. So watch this 680 spot. We'll see if the bid is ready to party right through it. This will be hilarious if we break out today. It will be so good. Ryan, the podcast is called Painting the Tape, and it's just free. There's nothing. We just goof around and talk about how we trade, stuff that we trade. Thanks, Manuel. I appreciate you. Yes, since May 14th. Maybe we just sell down from here. I don't know. All right, so this is a single print. That's getting sold back down into, let's see, what time is it? 11:07. I like this. I'm trying to figure out, one thing I am trying to do is get better at, not letting trades come back on me. So this is kind of this runner is kind of a hybrid base hit, right? So I'm going to put him right here at 631. So this locks in 30 points. We took off my scaled one here and scaled one here. I've been using 3 lots today. I like that we came. So the thing that I really like is we got right up to it. We got right up to that 680 spot and, kind of drifted away from it. There wasn't any big reaction. And so when I'm looking to break a big level like this, that was a big previous resistance, if I see it get smoked, like if I see it get destroyed, that doesn't make me feel as good as if I see it like the market kind of gently rolls up to it and is like, how's it going? And it's like, I'm all right. And then, it backs off a little bit. Those little gentle front runs, I want to see that instead of, barrel through. Yeah, this is all 2020. This could also be a good spot to be short. I'm not personally going to short this just because it's the top of this balance. I don't like to interact with, high time frame levels like that directly. That's also why I didn't take it last Thursday or whenever we died right off of it. Scott, the Boston card, you should hold on to that. That's gonna be worth something someday. You guys joke about this trading card, but easily a 5-hour conversation with ChatGPT designing these last night. So one thing about me, I love a bit and I will take it as far as I can. So get ready for Fed trading cards to become a reality in some capacity. I was trying to figure out how to print them. That's gonna be the challenge. Is how do I manufacture these? We might have to do like a pre-order. Actually, what I was thinking is we'll design them, right? Do a pre-order. We'll do like a, I don't know. There's lots of different ways we could do it. We could do it with like a Patreon or something like that. And then we donate all the proceeds from the Fed trading cards to the food bank. That's what I like to donate to. Food bank is a very powerful piece of everybody's community. So that's my rough idea for the Fed trading card thing right now. I don't know. I don't know if I could do it without getting in trouble. Like, how do you license Bostic? Do I have to write Bostic? Is there like, can I license images from the Fed itself? I don't know. BRZ and 331. The dark gray volume profile on the right is the Order Flow Labs volume profile, but there are, Jim said this yesterday, there are many different ways to get volume profiles on your chart. And, you know, Order Flow Labs has one. NinjaTrader has one. If you have the Order Flow license enabled, he also mentioned there were other third parties that, you know, create their own. So you can find a volume profile. Yeah, for Tintin, it would be 100% for charity. I don't think I could. Don't think I could profit off of that idea. I'm not sure there's I'm not sure there's that big of a pool to draw from money wise. Yeah, that's what I need to look at. Bad at screen names. Exactly. I need to figure out the parity, the specific parity rule for that. Maybe this could be like the most hilarious question to ask a lawyer. I could get a lawyer consult for an hour, and he's like, "You want to do what?" All right, Jesse, go ahead, bud. I don't hate it. You have a good high to lean on for that short. We're at the top of the balance area. We go back into this, the high time frame guy. Yeah, I mean, we're bumping up into this mess, which was, yeah, Thursday's, I think last Thursday's open. I don't know, one of those days. What day was the 30th? Thursday? Something like that. So yeah, this is gonna, if this breaks, I would imagine it's gonna take a little bit of time to chew through. And then we're on the other side of this LVN, so this is holding us back for now. But yeah, it's not a trade for me. Doesn't mean it's not a trade for you. So good luck. Using those boomer bands, Jesse. Okay. Lance, the VWAP is set to RTH, and this is +1, +2, and the VWAP itself. And then I have, you know, at the other side, I have -1 and -2 down here. Yeah. Yeah, so I don't know what this is going to do. We can we'll go back and, you know, we'll take a look at the whole day while we have some time. You know, as always, we go back to 3 a.m. See what happened. Okay. Here's our London Open. Was, you know, decent pivot for a second. Obviously we came into RTH pretty long off of it. This low was, I don't know, this low was not quite low enough for me down here. I don't really know why sellers gave up right here. I don't like that the pivot hasn't been touched yet. That's kind of a thing that I wait to have happen. The Job pivot get touched. Yeah, ES didn't hit its pivot either. So those are the only two reasons I'm a little suspect of this long that I'm in. And of course, also that we've been stuck in this balance for 9,000 years. But yeah, so I took the OR mid short here. I got stopped out, and then I got, I got on the other side of it quickly and scaled out. This was my final scale on that because at 10 o'clock we had jolts, jobless claims and stuff like that. So, binary news event, no need to be the hero. I don't want to get stuck in a velocity logic event with with a real contract on a real market. So, flattened here. Price seemed like it was going to continue up. I didn't see any big sellers enter the market, so I got back in a little bit above it, scaled those out, and then ultimately got stopped here. And then I just kind of let it go. We did come back and perfectly touch the 5-minute OR mid here again. I didn't take it. I'm still not trying to take the B trades, so that was a B trade for me. And then actually Merritt was narrating this as it was happening. There was a ton of bid coming in here in the 600s. So I got in here again, and that's kind of the trade that we're watching play out here. So I took 1, 2, and I had 3 lots on there. So yeah, this is my 601 average. And for the first time in my entire life, I've moved my stop into profit and I'm trailing it behind this. So first time for everything. Ooh, Besson is talking good. Trump aims to make the U.S. a hub for digital innovation. All right. Well, those are words. Thanks, guys. Thanks, everybody. Hello, DZ. Arthur, you're not allowed up there. My cat's gonna unplug my computer, and that's when the trade will go through. Bro, what are you doing? He should be asleep. This is normally his nap time. Hi. Yeah, get in your chair. Come on. He's a big dummy. What is it about cats? They love sleeping on like any piece of paper. They're just like, oh, I'll lay on this. This is good. I like paper. You just gonna chill down there? Okay. Don't do anything weird. Oh, that sounds good. I'll go fishing with. I'm a pretty bad fisherman. Um, no, I don't have any cat. Actually, he might be on the nip right now. I think my kid gave him the catnip Christmas mouse this morning. That's it. So yeah, he's all nipped up. You on the nip? No, he's in his chair. He's ready to take a nap now. I can't remember the last time I've got. Hey, morning XY. What's up, buddy? Tuesday's a good day because I get to hang with XY in the afternoon. Something to look forward to. Jesse, you can get the layout from Orderflow Labs if you subscribe to the tools that they they create workspaces and layouts for all their different platforms. Yeah, just Google it or go to it's just orderflowlabs.com. I'm pretty sure. Oh, I'll take XY in the fishing trip for sure. I mean, he's got the hat. I know he claims that he doesn't fish with that hat, but it doesn't mean that You can't someday fish with the Bass Pro Shop. Actually, maybe I could go to the Bass Pro Shop then. It's a Fugazi. Grindy Trend Day Tuesday. It is Tuesday, right? That's not typically a okay. Let's see. Let's see if they want the smoke. Just pull up this big guy again. So, yep, there's our balance. We're testing. Look at, there's all these highs. So I'm looking at 691, I guess 702. So I would consider this like, the real pivot area of this balance area right here, because you had these lows. This is a 30-minute chart. I don't use volume bars on my higher time frame stuff. You have these wicks here that were supportive of a move higher, and then once they were lost, then you have these other wicks here. So I would consider, and just this little volume node over here, 700 to 710, is our little vacuum we need to get through if we want to see it go higher. I mean, we could, never know. You never know. We might run the high. Who knows? I really don't know. Nice to be long. So this is let's move. Let's keep moving our stop. Because we're stop movers now. I'm learning a new skill. Jim says, always be learning. Always be learning. I'm supposed to know. I wish I knew. I wish I could tell, the future. I'd probably, I don't know, it probably would be a curse. I'd end up like Biff and Back to the Future too. Just start Stowe Town, build a big casino in the center and just live at the top of it forever. It doesn't sound bad. The XY, by the way, if I ever build a casino and live at the top of it forever, I'll give you sick comps for when you come stay and play back. You can stay. I'll have a big room. It'll be cool. Imagine the beer fridge. Ooh, it's going to be nice. Hey, Kane. Yeah, right. I can't believe XY dropped that Pit Boss Alpha on us yesterday. This bid, a new high would be encouraging. Let's see if that still works. Hey, Neil. Good morning, bud. I don't know. Unrelenting for now. This is a lot of passive selling that's just getting, obliterated for the moment. So if this holds and then becomes an active seller, then I would consider that a rejection of the top of the balance. London closing at the moment, so it's gonna wiggle a bit, but I don't know. That's what I'm watching. Yeah, DZ. I just use +1, +2, -1, -2, and then I color that. I have that band filled in for myself, and yeah, it's just the session. So just RTH, New York, New York session. I'm actually excited to be done trading so I can go talk to ChatGPT more about this card game. You guys are about to find out the true level of my obsessiveness when it comes to a bit that I think is funny. Oh yeah, PAX, is it the Chicago session? Well, it is a VWAP, so I guess VWAP would be based on Chicago. VWAP is based on the New York session. That's how you know that's how I was taught. My word, somebody trying to get some stuff done up here. Yes, PAX, I know. Gabriel, how do I tell if a large order is an active, aggressive seller or a passive buyer or the inverse? So I'm not talking about like specific orders on the book. I'm just looking at like we had it's changed since then, but so this is the delta volume profile over here, and I was just seeing a lot of positive delta, which means that a lot of buyers are crossing the spread to the offer, and someone is on the offer passively absorbing those bids. So right, there's two sides to an order, right? There's a bid and there's an offer. And in order for price to move, somebody has to cross the spread between those two prices, right? If a bid is crossing into an offer, that creates positive delta. And if price is not moving and it's just sitting there while the bid is crossing into it, then that is what shows you that there is a passive seller that's, it's like the bid is saying, hey, I really want to buy 680. So it's crossing over into 680. And there's a passive seller that is just sitting on 680 saying, sure, come buy as much as you want. And so that was that big absorption that we saw. And what you need to see to determine if that's going to be, an inflection point or not, is then you need to see an active or aggressive seller come in and start crossing the spread to the bid side. So passive seller absorbs a bunch of active buying, and then an active seller comes into the market and crosses the spread to the bid side, then that would show me that like maybe that's an inflection point. Maybe that's where price is, going to stop because buyers ran out of gas or, anything. And market orders are not always, active participants trying to buy or sell. You have to remember that, that could also be buyers that were trying to break through that passive seller, and then they're giving up and they're marketing out of their position up there. So, market orders are also stop losses, that sort of stuff. Futures do run the world. That's true. All from Chicago. This, yeah, I mess with Leo about that a lot too, because he's a big Central Time Zone fan. Yeah, Norseman, large orders will start stepping down the ladder. Yeah, sometimes. That I don't think that's always the case. I I go back and forth on the pulling and stacking. I try not to look at it too much, just because I get I'll get lost in the sauce there. I try to stick more towards the delta. So what happened, the way we could tell that someone came in and began to hit the bid or cross the spread from offer to the bid side is this positive delta was much, much larger up here. And also those sweeps coming in too. That's a good sign for a seller. But this was way more positive delta, and this negative delta was not there until these bright red bars happened. And that was, I think this was a couple hundred, this was a couple hundred. And when you have someone coming in and crossing the spread to the bid side, that's going to erase those numbers because, there's now no longer that much positive delta sitting there. Someone has created negative delta. So this math problem changes. And so now we're just down here seeing if, this bid delta is going to be supportive or not. Still fighting with this. So it's definitely become a battle up here, which is not a shocker because it's, the top of this dumb balance we've been stuck in for 9,000 years. I don't know, Elijah. The tape looks quite thick, actually. For NQ, there's a ton on the book right now. I would say. Yeah, Jesse, I use the DOM every day for sure. I think that you can get it just depends on what fits your execution style. I find it just to be mostly personal preference. I use @bid and @ask inside of the DOM, which is it's kind of another way to look at what a footprint chart shows you. For some reason, I was never good at looking at a footprint chart and being able to see anything of significance. So, but I found @bid and @ask to kind of accomplish the same sort of thing for me. What settings do I have on my chart and view up channel? So yeah, it's just a normal view up. +1, +2 is the band. -1, -2 is the band. Set to regular trading hours. Pretty standard. I mean, any VWAP that you're just going to pull up is just going to default to that. I just color it so the band has a little opacity to it, and the rest does not. So how do I go about using the DOM? I just stare at it relentlessly until something happens. It's like that. Jesse, do you know about the Simon game? I don't know how old you are. Did you ever play the Simon game when you were a kid? It has like four colors on it. It makes sounds and patterns. That's kind of how I approach the DOM. Exactly like that. And I'm not joking, unfortunately. Yeah, BC, I use the bands for slope. I also have created some rules for myself around the bands. Like, if it's sloping up and we're inside of this band, I'm not, even though this is a good short setup, I'm not interested in that because I tend to get run over in those situations. And, if the bands are flat like this, then I'll consider playing mean reversion stuff inside of the bands. I'm more willing to buy inside or sell inside of the bands if they're flat. So yeah, mostly just slope tied. It's just like a little trend clue kind of. Yeah, Hawk, this is
oh boy.
I thought this was a serious show. I thought we weren't allowed to have clips on the serious show. I think one of the producers just fell asleep and hit the keyboard and must have hit the soundboard by accident. Yeah, up would be good, but anyways, Hawk, yeah, I'm trading in Q. I'm trading MNQ on a NQ chart to be more specific. But this is all NQ data. Jesse says I played Fortnite as a kid. Okay, cool. So I'm 1,000 years old, confirmed. Ouch. Woo. Zing. Zing indeed. Well, anyways, Jesse, just go ahead and Google Simon the game and you can see what I'm talking about. It used to be this archaic technology before video games existed. Ah, marbles is cool. Oh, hey, Boppet's a similar thing. Fair enough. Yeah, Boppet was like the middle millennial version of Simon. All right, so Boppet. Okay. Yeah, Hawk, this is a NinjaTrader chart. It's down here. Do you see? There's a copyright and everything. In the business, we call that a watermark. Ooh, driver trades. I wasn't aware about that. Closer to 2050 than 2000. Woof. Woof. Yeah, AV24 in the biz. In the biz of trading in front of people on the internet. I don't know if that's a biz. I don't know if that's a proper biz or not, but we're in it. So yeah, we're still just grinding up here. I this is encouraging for my long. We pushed out of this balance, and now we're building a new one up here. So yeah, I'm a male entertainer now. I'll tell my wife. She'll be impressed. Probably. Oh yeah, please like the chat. I'm sorry. I'm supposed to say you have to like the YouTube stream. It helps us out. I mean, Merritt probably got me a good bit of likes. I have to say the like thing lasts in the mornings, I think. Merritt probably already pumped the likes up pretty far. How many am I rocking? Somebody tell me how many likes. 420? Oh, that's so many. That's plenty. How many are Merritt's though? You know, how many are mine? Can we own likes? So many. Thanks, Ahmed. Thank you. Yeah, Kane's that record's never coming down. People's Observer. I'm sorry to say. I'm not here to compete with Kane for likes. So coming down into this, like, I want this to be supportive. I'm also aware that this is, possibly running out of gas up here. What's going to be a really bad look is if they leave all this volume up here. I believe XY would refer to that as locking it out. And then everybody that is relentlessly buying this right now is going to be super sad. And then, then they're going to be hitting the bid with their market orders to get out. And if we get pulled back into this balance area, I'm going to be less encouraged at the idea of a breakout. Omni, do you not see? I'm so far past break even. I've got 47 points locked in. Look at this. Look at where my stop is. Hey, Aaron. Yeah, yeah, I trade ES2 sometimes. But mostly NQ. I'd say I probably trade NQ 80% of the time. Yeah, we got nothing. That Europe close didn't do much wiggle at all. This would be a pretty good ad here if you were able to keep it tight. I just don't. Yeah, I'm just not doing that right now. I'm still, I got to stick to these rules. Put them in place for myself. You're supposed to be keeping me in check, chat also. So keep in mind, I need to get, I need to be yelled at. You can use all caps. I'll give you permission to use all caps. Just as one time. If you see me doing something that I said I wasn't going to do, hit me with all caps. Hey, Leo. Dude, look. Look at this. Look at how far my stop is into profit. Look. It's in. I got 50 points in the bag, baby. No, AV, it's not a new no adding rule. I'm just not going to I'm just not going to take this aggressive ad to push into this. This Jesse guy keeps trying to get me to this top, which is the other reason I feel like holding. Leo, you missed. Did you miss my story this morning about how I think that it's possible, since I decided to only take base hits, that today's the day that we're going to break out of the balance? Yep, right? Yeah, it's in the stars sometimes. So funny. The market is so funny. That's also why I love it so much. Is it like it truly is ridiculous. Like it will beat you down to the point where you are literally questioning everything, and then immediately turn around and do the opposite of the way that it made you feel for, weeks or months. Just like, and it seems to have that impeccable timing of just like, how did it know? How did it know? Yeah, loon until you're in tears. That's why you got to manage your risk so much. Is it's like, if you don't do that, you're toast. Yep, it's all mental for sure. Yeah, so much absorption up here. They're stacked on this offer. Like there's 10 lots every, I don't know who said the tape was thin. Because there's 10 lots like every tick up here. Cellar City. No super big no like 100 or a couple hundred lot folks playing today. So that's interesting. But yeah, if you watch all this stuff, like watch how it sells back down into this, and then you see the positive delta accumulating. So you're kind of seeing the same stuff that I'm seeing on the tape. See, there's big, see it clicking. This is a passive seller getting sold into here. And I don't mean I don't mean like it's one dude. Like yeah, because I don't know. I'm just, for the sake of my narration, I'm like, okay, this is a seller, this is a buyer. His name is John. Steven, this is a delta volume profile. It shows that stuff. The other thing that's pointing to the trend is like this thing's set to reset every 60-point rotation, and we haven't had one in 150 points or so. So this is also another reason to hold on to this. Yeah, it just means that yes, exactly. Their offer is just sitting there, and sometimes you can't see it on the book itself. Could be an iceberg order. There's lots of different execution methods that people use when they're trying to get off, a billion lots into a specific area. Because they're not just going to put, if someone has to sell 680 lots at 680, then they're not just going to put a big brick order there. They're going to use a computer program or an execution program to, execute those trades. Was getting spicy. New high would be encouraging. Nah, no new highs. It's just still just grinding into this seller. I wonder if that's a good point. I wonder if they name their execution programs. Zaddy says, any advice if I keep lacking execution? My setup is there confirmed, but I still hesitate and don't go for it. Yeah, so I don't know. Are you oversized? Like what is making you feel uncomfortable? I would try to figure that out and go from there. Like if you're trying to get in with some the size that makes you nervous, then that would be my first guess as to what is making you uncomfortable. Um, Other than that, you just got to go for it, man. You just got to you got to click the button and see what happens. Because that's the only way that you're gonna learn. Just put one micro on and risk something that's comfortable to you, and just try. And you can do a lot of damage with just a couple micros. There's plenty of range and plenty of ways to make money with several micros in this market. DZ, so give me where I can learn good auction market theory. Yeah, I don't. Yeah, there's lots of I would just Google it. I'm not super comfortable giving specific names or anything. Obviously, like Jim Dalton is a very famous auction market profile person that wrote a lot of books. Chat, maybe you can help with this too. Send some free resources to DZ so they can learn more about auction market theory. We're all here to help each other. It's part of a community, so yeah, let's see if we can get him some good links. I mean, there's plenty of stuff you can figure out for free with auction market theory. So I encourage you to just, float around YouTube, watch some free Dalton stuff, watch some Stoudemire stuff. Yes, Merritt does a lot of stuff too. Yeah. Oh, JC Ronos. How do I trade MNQ on an NQ chart? So what you have to do is you just set a Let me find it. Okay, so you go up here to data series. And what you have to do is you have to put a MNQ data series as a second data series on your chart, and then just make all of the candles transparent so they don't show up. So it's basically just a data series that is, just sitting here. Let's see if I can run this now. Did the seller get his revenge again? Oh, we moved the POC up here too. Oh, this is gonna be so gross if they can't break this again. But yeah, it's all about having a second data series.
Stowe.
Yo, is it time? Oh wow, 11:50 already. My word.
Time flies when you're banking some bank.
Yeah, not too bad. I
Yeah.
can't believe Jim, I got to tell you how uncomfortable I am with having my stop all the way up here. It's making my skin crawl, to be honest.
I'm proud of you, man. I'm proud of you. I love it.
Thank you. You can't be an old dog that doesn't learn new tricks every now and again. You'll just be an old dog, right?
So one way that to answer that question about looking at a NQ chart or a MNQ chart and trading an NQ or vice versa.
Yeah.
So I just have my trading ladder, on the side, and it's set to, let's just say, NQ. And if I'm looking at an MNQ chart or vice versa, it's one data stream, but it's just two different modules to use on NinjaTrader.
Yep. Yeah, and then the other thing too, if you do the second data series, it shows up in here on Chart Trader, so you can see I have an NQ data series and an MNQ one, and then that way it will still plot my MNQ executions, even though there's not any MNQ candles that are visible here. So you can still see where my MNQ trades are on the NQ chart. That's the other reason I do that too.
Yeah. Yep, 100%. That's super awesome. All right, so this is just what you needed, brother.
I think so.
But don't forget your words from yesterday.
Which ones? I talked for like an hour. You're gonna have to.
Well, I know, but you went through the whole process yesterday, right? And so a week from now, you're going to be rolling, and you'll be captain of the universe again. But don't forget those humble words, and you'll stay true to your journey.
That's right, sir. Absolutely. It was so good. I had so much support. I'm so lucky. There's so many people that just trade and they got nobody to talk to. I'm surrounded by talent and people that are so good and also such good people. Like, yeah, everybody on the NinjaTrader crew that reached out to me, all my dumb trading friends that I, hassle with this stuff all the time for putting up with it every 5 or 6 months when, the world's crashing down. Yeah, I'm a very lucky guy.
Someone told me this is the world's best, hardest, most boring job on the planet.
Yep.
So
it's true.
But we have the NinjaTrader Live community on our side. We got great folks. Everyone's so positive in the chat. Everyone's, helping each other out. This is what makes this really, really good.
Yep. Jim, do you have good auction market theory stuff? Do you use some auction market theory too, right?
Yeah, Tracy's throughout Stottlemyre, J. Peter Stottlemyre for that stuff. Yeah, you Google it, you'll get a million resources. The oldies are always the better ones, but Dalton's good. Yeah, there's resources out there for sure.
Awesome.
Yeah.
And it's just like, I don't know, when I forget who asked me that, DZ. Yeah, when you're going through that stuff, like, it just make sure that, just read it and see if there's anything that clicks with you, because you never know what's going to be the thing that like makes it make sense. Like I said, with a footprint chart, I couldn't look at a footprint chart to save my life and understand what's going on. I'm like, my eyes cross and I'm like, there's so many numbers in these candles. This is terrible. But when I looked at bid and at ask and Adam, I'm seeing basically the same thing, but all of a sudden, like, that worked with my brain. So you just got to find I don't know, like you got to find the lens to view the market with that makes the most sense to you. then go from there.
Yeah, I mean, there's different methods. I mean, I remember early on in my career, I was, with John Carter, and John was using Tick and Trin
Oh
plugged
yeah.
into a E-mini and Q chart, and that was his thing for a while. He's kind of changed since then. But then I had another broker of mine that was trading back in the day. He just used Keltner channels, and
Oh, okay.
he was great at that. And so it's,
Yep.
it'll click with you once you get the thing you like.
Yep. I agree. I mean, like, look at a good example is Sarah. Like, Sarah trades the strat. The
Yeah.
strat is a whole different way to look at price action.
Yeah.
And that works for a ton of people. So you just got to find the thing that speaks
Yeah.
to you.
Anyway, awesome, man. Well, listen, thank you. We'll see you again this afternoon.
Yes, sir. I'll be back.
You and XYZ, 2:30 East Coast time, folks. Everybody tune in if you get a chance. I'm going to do a really quick, I should share my screen, mission control. Sorry about that. Hang tight. I'll get that going here. I'm going to do a really quick edge report here at the end of the day, at the end of the morning here, before we are finished. So let's get that screen up here, mission control, if we can. Thank you very much. All right, so I changed my look and my feel of my charts a little bit. This might be, if this is too much for everybody, let me know. I have my main area here on the right-hand side where I'm looking at stuff, and I could toggle between a intraday chart and a daily chart. On the left-hand side, I also have a daily chart. And then on the lower left, I have a 4-hour chart because Tracy uses a 4-hour chart and she's very smart. So I added that to as well. But in any event, even the S&P today, really nice drive right up to that Mentor Q JAX 1 level. I mean, we're right at it right now. I'm not saying we can't go through it anymore because there are some more targets to the upside. But 59 exactly it is 59.75, nice even number is where that gamma level is. Above that, you're going to have this call resistance level at 6,000, and right above that, that 1-day max again, Mentor Q secret sauce level right there at 6,003. So we'll see if we get a breakout above that JAX 1 level right now. This is looking pretty positive. The opening range here. I love when this happens. You have this opening range in the London session, right? And we didn't go anywhere fast. And then we kind of trickled back up, and then boom, we hit the ground running when we got to the US session. So the London session doesn't always tell the story or predict the future of what's going to happen in the stock index futures. In this case, it didn't. But then the other thing to keep in mind is at some point this morning, we crossed over that session VWAP. That's that white line there. And I have the standard deviation bands kind of lightly highlighted behind it. That's the other change I made to the chart. So buyers are in charge, right? We've lost VWAP in the rearview mirror, 7 to 7:30 candle. I have it on a 30-minute chart. You can see it more precisely on a smaller time frame, but we've never looked back, right? We only wicked through it once, and that was temporary at the end of the initial balance in the U.S. So this market is looking super, super strong right now. Not interested in hitting the sell button whatsoever. And other than that, I just quote board really quickly here. I changed it up a little bit. Again, any colors, any things you guys don't like, let me know, and I could change it around a little bit to make it seem better. But not that much movement across the board. Currencies, yeah, down a tad bit, which means the dollar's a little bit stronger. Equities are up a tad bit, right, across the board for the second day. And then the treasuries are, depending on where you're at in the yield curve, are a little bit mixed, but pretty much getting close to unchanged. Crude is on a roll. Let's check out crude really quickly here. Sorry about that, mission control. We're going to do that really fast because that's also an interesting daily chart. Let's just pull that up really quickly here. We just kind of, boom, we're getting back to that. Look at how long this area of resistance is held. 64.05 forever. This is the middle of April. We can't penetrate it. We tried again. Well, now we're trying again today. Yesterday's candle had a big seller's wick, but we filled that. So we'll see if we could pop up and make some new highs in crude oil. And this afternoon, we'll talk a little bit more about Treasury bonds as well. All right, that is the end of morning edge report. I appreciate everybody being here with me today. Thank you, Stowe, Order Flow Labs in the house. You guys did great. Great session today. We will be back at 2:30, me and Shai, hot commodities. And then again, Order Flow Labs trading the close, XYZ, Stowe times 2. Look forward to seeing you guys there. Thank you.